Yeah. So let's begin the May 26 attempt MTP1 income tax discussion. Okay, fine. Straight away, first I'll solve with MCQs. Then I'll go with the total income and remaining heads of income related problems, whatever that they are asking. See, the most important thing that you need to learn when you're solving MTPs is understanding the approach of solving. So the learning objective is, it's not that how many marks will come from the MTP1, MTP2 or RTP. It's not about that. It's about understanding and testing the way you understand the provision. So in exam, definitely 99.99% a new question only will come altogether. That's something you didn't solve earlier. But it could be a similar model to what is already there in the MTP, RTP, past exam questions, something a similar model. But multiple models related, multiple adjustments they'll take and compile into a single question. So like that also it might happen. So when you're solving MTPs, the learning objective is understanding how best you understood the provision, how best you can apply the provision that you understood. So that is the learning objective. Fine. First one, MCQ. First case study scenario. Now if you see, when you're solving MCQs, the first thing you should look at is what question they're asking. They're asking income from salary. They're asking deduction available under chapter 6A. They're asking total income. Three questions they're asking based on given case study. If you know the questions what they're asking, when you're solving, you will avoid unnecessary items. Okay, but still, given information, given problem information, whatever the case study they give, full case study you need to read and then start solving the problem. Okay, fine. Now, so look at, so here they have PGBP income is there. You see here, entire salary income is there. Okay, then RPF withdrawal is there. Oh my god. Then PGBP income is there. Then he has purchased house property for self-occupation. Okay, capital gain computations probably might be there. Okay, he's paying tax under default tax regime. Look, most important thing, he's paying tax under default tax regime. This is most important thing. If nothing is mentioned, we assume default tax regime. If specifically they mention optional tax, then optional tax regime. Based on the facts, choose the most appropriate answer to the following question. Every question when you're solving, every question, be it MCQ, be it descriptive, the first thing you should look at is what regime is that. Otherwise your answer will go completely wrong. So what regime is that? So here we are going to learn, here we are going to solve under default tax regime method. Okay, fine. Now, anyhow, total income question they're asking. So I need to find out chapter 6A, I need to find out gross total income, I need to find out head of income wise total. So it's typical total income solving problem. Okay, fine. Let's do it. See, technically this question deserves 15 marks if it is a descriptive. But since it's an MCQ, you don't have to present it. You don't have to spend time on presentation. It's just deriving the answer. 6 marks they give, which is also proper. Okay. Now look at Mr. Nikhil, aged 42, is employed in an MNC in Gurugram 2013. He submitted his resignation on 31st July 2025 for starting his own business and gave a notice period of 1 month to the employer. He received the following emoluments for the period 1st April to 31st August. He resigned on 31st July with 1 month notice. Means 1 more month he will serve with the company and then resign. That means up to August he will be serving. April, May, June, July, August. 5 months he worked in the company. So correct? Now basic salary how much? I'll directly solve it. Okay, I'll directly solve it. What is the basic salary? 45,000. And remember, he only worked for 5 months. So how much is that? 45,000 into 5. 2,25,000. Okay, next. DNS elements 10% of the basic pay, and they're mentioning that it is retirement purpose. Yes or no? DA for retirement 22,500. And next, medical elements. Remember, medical elements is always and fully taxable. Correct? Medical elements is always taxable fully. 5,000 per month. He worked for 5 months only more. So 25,000. Everything you should take only for monthly. Entertainment elements fully taxable, 2,500 per month. Entertainment elements, how much is that? 2,500 to 5. So how much it is? 12,500. Next, commission 10,000. Remember, that's a fixed commission, not a percentage of turnover. Yes or no? So I will write specifically as fixed commission. 5 months. How much it is? 50,000. Correct? Then employee contribution to RPF. How much? 7,500. Employer also contributed the same. Now RPF contribution, employer contributed 7,500 into 5. 37,500 they contributed, but what is exempted is 12% of salary. basic plus DF for retirement, commission percentage of turnover. Basic 2,25,000, commission, sorry, DA 22,500. That's it, 2,25,000 plus 22,500 into 12%. Okay, 29,700 only exempted. 37,500 minus 27,900. How much it is? 9,600 taxable. Understood? Yes or no? How much employer contributed? First take the amount of employer contribution. Amount, first convert what they contributed. Minus, apply our logic. Apply the provision, 12% of salary. Salary, basic, DA for retirement plus commission percentage of turnover. Here what they gave is fixed commission ma. It's not percentage of turnover. Therefore 0. Are you clear? So this much is exempted, this much employer contributed, therefore this much is taxable. Remember this amount, default tax regime is following. There is no chapter 6A reduction. If at all SS is following default tax regime, there is no chapter 6A reduction. That we need to remember. Next, interest accrued on RPF at 13%, 9.5% exempt, 3.5% taxable. Correct? Interest. What happened? Correct? Interest on RPF. How much is the interest amount? 14,300. This is equal to, what is the rate of interest company paid? 13. How much is taxable? 3.5, because 9.5 is exempted. 14,300 into 3.5 divided by 13. So how much is taxable? 3,850 is taxable. Okay. 7,000? Okay, wait a minute. I think I might have taken wrong calculation. 37,500 minus 29,700. Okay, fine. So 37,500 minus 27,900. Sorry. 29,700. Yeah. I think I took 27,900. Okay, fine. This is 7,800. So I'm just correcting it. Yeah, fine. Next. You also check my calculations, okay? Simultaneously, fine. So with this business is over. Then in October 2025, okay, fine. I think he withdraw entire RPF in the account September 25 to invest in his business, okay? How long he worked in the company? 42 years, okay? He started his own business and gave 1 month period, notice period. He withdrew the entire amount in September 2025 to invest. How many years he worked in the company? Okay, since 2013 he is working. So, and he withdrawn from RPF in 2025, more than 5 completed years, more than 5 continuous years of service, and withdrawal from RPF is fully exempted. You don't have to tax it, correct? Then he employed, 80JJAA is there. 80JJAA, chapter 6A reduction is available, yes or no? Because they gave, the 80JJA information and house. Okay, fine. So I think salaries data fully we considered. So now I will close the salaries first, head of income, correct? I will close the salaries head of income. So what is the salary now? What is the gross salary? So 2,25,000 plus 10% plus 25,000 plus 12,500 plus 50,000 plus 7,800 plus 3,850. Correct? 3,46,650 minus standard deduction. Remember default tax regime 75,000. Correct? So what is the net salary? 2,71,650. This is income from salary. Agreed? Then I will look at PGBP income. Now, they mention PGBP. In October 25, he started business of manufacturing of footwear under the brand name Comfort. He withdrew entire RPF and invested in the business. He has employed 75 employees at salary of 23,000 and the participated in RPF. They all come under, in case of new business, whoever recruited in the first year, they all come under additional employee definition. Provided 80JJAA, you can claim only when tax audit is applicable. And for the financial year 25-26, PGBP income is how much more? Computed income they gave, 51 lakh they gave. Only chapter 6A you need to look at later. Yes or no? Business income computed they gave. And turnover is 7 crore. Nikhil received 12% of the sales in cash, which is more than 5%. Therefore, tax audit limit is 1 crore only. It's not 10 crore. When tax audit limit of 10 crore is applicable, 5%, maximum 5% of receipts, maximum 5% of payments only can be in other than cash. Can be in unapproved methods. Minimum 95% must be through approved modes. If it is 95% is through approved modes, then tax audit turnover limit will be 10 crore. But here for the SSE, 95, it's not 95, it's less than 95 only, in approved modes. So 12% means obviously 88 only is in approved mode. Therefore, 10 crore limit of tax audit does not apply. 1 crore limit is applicable and his turnover is already 7 crore. Therefore, he is liable for tax audit. Therefore, he is eligible for 80JJAA. Able to understand? So now tell me, what is the PGBP income? They gave already computed income. How much is the PGBP income? 51 lakh. So that information is given to give you an idea whether tax audit is applicable or not. Why that information is required? 80 JJAA is claimable only when the SS is subject to tax audit. Next. So that's it. JJA deduction we'll look at later. Then on 1st December, he purchased a property for 90 lakhs for self-occupation by taking a loan of 45 lakhs on the same day. He has paid stamp duty of 6 lakhs 25 and purchased the property. Why they gave this information? On 1st December, self-occupied property. So NAV is equal to 0. Okay, house property income we need to compute. House property income and self-occupation they said. So cost of acquisition from capital gain point of view 96.25. That's cost of acquisition. 90 lakhs is house property cost. 6.25 is registration. Total 96.25. Correct? Moreover, he paid interest and it's a self-occupied under default tax regime. NAV is equal to 0 and you can't claim any interest. Therefore, the effect is 0. Yes or no? Are you clear? So therefore, I think this does not have any impact. This particular information does not have any impact. I think yes, correct. There is no impact on this. Correct? Now look at what is the gross total income. So 2 lakh 71,650 salaries income plus 51 lakh. 53 lakh 71,650 minus chapter 6A only 80 JJAA. Correct? So how many new employees he recruited? How many new employees? 75 employees. Oh, 1st November. Employed for less than 240 days. Employees were employed for less than 240 days. Yes or no? By the way, wait. It's a footwear company. For apparels, it is 150 days criteria. 150. I hope you know it. 80 JJAA. Employee number of days is 240 days he must have been employed for. But an industry which is there in apparels, then it is only 150 days. So 1st November onwards, how many days? November 30, December 31, January 31, February 28, exactly 151 days, which means they are eligible employees. Eligible employees. To them, whatever salary company paid, no. Yes or no? That salary is eligible for 80 JJAA deduction at 30%. Correct? Oh my God. So 75 employees into 23,000 monthly salary for 5 months they paid. Yes or no? November, December, Jan, Feb, March. So how much is that? 75 into 23,000 into 5 is equal to into 30%. Into 30%. 25 lakh 87,500. This is the deduction. Hello? Yes or no? So how much is that? 25 lakh 87,500 is the deduction. So what is the net total income? What is the total income? 53 71 650 minus 25 87 500 is equal to total income 27 lakh 84,150. That's it. What is the questions they're asking? First one, income salary. How much is the answer? We already computed 271 650. Yes or no? The answer is 271 650. What is the amount of chapter 6A available? Just now we computed. How much is the answer? 25 87 500. 25 87 500. Then what is the total income? Array, easy. Total income 27 84 150. Perfect. Look at the answer. What is the answer? Option number A. Question number 1. MTP question number 1. Option number A. Correct? Then question number 2. Option number C. Then question number 3. Option number B. That's it. Sometimes in the MTP answer could have been wrong. 99.99% our answer will be right. Just now it is matching, no problem, but I'm just telling you. You see how we derived it. Are you clear? Yes or no? Next. Question number 2. I'm proceeding further. Question number 2. Remember, most important thing for MCQ, what I notice in most of the students is they want to finish it within 30 minutes, which is absolutely a blunder. What is the weightage of MCQs? GST income tax put together 30 marks. Yes or no? Income tax and GST put together 30 marks. And you need to spend 2 minutes per MCQ. So 1 hour time you can spend on MCQ. With respect to income tax MCQ, you can happily spend half an hour to 40 minutes. No problem at all. Able to? So don't try to hurry it up and do wrong answers. If you score in MCQ 30 on 30, another 30 scoring in descriptive is not a big deal. Exemption scoring today is damn easy. If a student is not able to score exemption, is purely because he is not proper in preparation and not proper in the strategy. Okay, making exemption is easy in any subject today because 30 marks is MCQs. That's it. If you really learn the concept better, that's enough. For MCQ, what is important? Not remembering. Learning is better. Yes or no? I mean, of course, income tax remembering is also important. Next, can I? Mr. Deepak gifted 50 lakh, but before that, what question they're asking, I will look at. In whose hands interest income derived from Deepika, interest on FD of Dhanvi? Okay, clubbing provision they're asking. In whose hands loss from business and capital gains would be included? Okay, clubbing only, that is also. What would be the total income of Natasha? Okay, fine. 3 questions they're asking, correct? Huh? So fine, we'll compute it. Next, look at Mr. Deepak gifted 50 lakh to his wife Natasha on her birthday on 22nd January 2025. Natasha lent 6 lakhs out of the gifted amount to Deepika on 1st April 2025 for 6 months, on which she received interest of 40,000 rupees. Fine. First I will directly compute. Okay. Deepak, Natasha. Yes or no? Deepak, Natasha. Now, if you observe, Deepak, no, he gifted to wife, and wife lent that money to wife lent that money for 6 months and she received interest. This amount is clubbed in the hands of Deepak only. Yes or no? Because Deepak is the transferor. 64 subsection 1 clause number 4. Able to? Next. The set sum of 40,000 was invested in shares in listed company on 12th November 2025. Okay. Which were sold for 76,000 on 25th March. Okay. Again, the said 40,000 rupees interest that was invested in shares which were sold for 76, which means 36,000 capital gain is there, which is a short-term capital gain, 111A. This is not subject to clubbing because this is called accretion to the income. Yes or no? So short-term capital gain, 111A, which is 36,000 is not subject to clubbing in the hands of Deepak because that's an income on the transferred asset. So that is not subject to clubbing. How much is that? 76,000 minus 40. How much is that? Correct? 40,000 is cost of acquisition, 76,000 is the sale value, 36,000 is short-term capital gain. Then STT was paid on purchase of sale of, it doesn't matter. STT we will not consider. Yes or no? The balance amount of gift was invested on 1st April as a capital by Natasha in her new business. Okay. So look at, out of 15, 6 lakhs she gave as a loan. On that she got some interest. That interest invested in stock market. So balance loan is what? 9. This is invested in business. Then she suffered a loss of 50,000 in the business. Okay. So how much is the loss, ma? See, entire. Okay. Okay. Natasha is working in private company with a salary. She paid. Okay. Tuition fee. All that. I think Deepak is working in an MNC. All that. I think Natasha has not invested. The balance amount of gifts was invested as capital. New business. She didn't invest any money out of pocket. So entire money is invested out of the gifted asset from the husband. Therefore, entire business result will be clubbed in the hands of the husband. If it's a profit, profit will be clubbed. If it's a loss, loss will be clubbed. So how much is the loss? 50,000. So this 50,000 will be clubbed in the hands of the, Deepak. Yes or no? PGBP loss. Again, 64 subsection 1 clause 4. The same treatment. Are you clear? Next, remember, this is IFOS income, this is PGBP income. When you are applying set off between the heads, you should be careful. Okay, you should apply our head logic. A PGBP loss can be set off with other sources income, no problem at all. Yes or no? Except salary, you can set off with other sources income. Yes or no? Now next, Natasha is working with a private company as a sales executive at a salary of 62,000 per month, and she paid 3,500 towards tuition fee of the daughter Dhanvi. Yes or no? By the way, what is the okay, both Mr. Deepak and Natasha opted out of default tax regime, which means optional tax regime. Correct? Fine. So Natasha is working with a private company, 62,000 per month salary. What is the income from salary? I will directly compute, ma. Income from salary. How much is the monthly salary? 62,000 per month, ma. Sorry. What is it? 62,000 per month into 12. How much is that? 7,44,000 minus standard deduction. How much? 50. How much is the Natasha income from salary? 6,94,000. Do you agree? Tuition fee I will reduce at last. Okay. Then, so this is ATC, ma. So ATC spending will reduce at last. Then again, Deepak is also working with MNC on a monthly salary of 64,000. Then he gifted 1,25,000 to Dhanvi minor. The amount is deposited in SBI. Interest and RA. Okay, fine. Deepak, over. Problem over. Again, Income from salary of Deepak ma, 64,000 multiplied by 12 ma. How much is that? 64,000 into 12. 7,68,000 minus Deepak is also eligible for standard deduction. Correct? Now how much is the Deepak income from salary? 7,18,000. Correct? So this is salary income, this is Natasha income. Correct? Oh my god, there's a twist here. Okay, fine, I'll tell you. Then he gifted 1,25,000 to Dhanvi on her 13th birthday. Yes or no? This amount is deposited as 2-year term deposit with SBI in her name, on which interest of 11,500 is earned during the year 25-26. Correct? So fine. Deepak is working with MNC on a monthly salary of 64,000. Okay, he gifted 1,25,000 to minor son. The amount is deposited in 2-year term deposit, on which 11,500 is earned during the year. Now this minor income is clubbed in the hands of the parent whose income is higher. So first I need to set off. Now first I need to calculate total income whose income is higher. Correct? First I need to calculate before including minor's income whose income is higher. Total income before 64,1A. Correct? Now for this I need to apply set off these two. Maximum 40 only I'll set off. 10,000 I cannot set off. The 10,000 I will carry forward. Yes or no? Now what is the total income of Deepak? 7,18,000. Now what is the total income of Natasha? 6,94,000 plus 30,000. Sorry, 6,94,000 plus 36,000. How much is Natasha income? Oh, mother income is higher. Mother income is higher. Therefore, it doesn't matter who gifted. Minor son, how much is passive income? 11,500. Correct? And optional tax regime 1,500 exemption. So therefore, minor income Dhanvi's interest income is clubbed in the hands of the mother. Correct? That's it. So therefore, revised total incomes are 7,18,000 and 7,30,000 plus 10,000, 7,40,000. That's it. The answer is over. Okay. Wait. What is the tuition fee she paid? What is the tuition fee she paid? 3,500 toward tuition fee. Then wait. Then we need to calculate. One more important point. Before including minor's income, whose total income is higher? Yes or no? This is gross total income minus 80C. Tuition fee mother is paying, no? How much is the tuition fee that she is paying? 3,500. Okay. So which means 3,500 into 12 months, how much it is? Deepak income is higher now. So what is the total income of Deepak? What is the total income before minor's income again clubbing? 7,18,000. And now here it is 7,30,000 minus 42,000. Total income, it's not gross total income. Yes or no? Now what is this? 6,88,000. Before including minor's income, after reducing chapter 6A, see, total income you should compute. Total income means what? After applying set off, after applying carry forward, everything you should apply and then find out, able to understand. So now Deepak income is higher. Therefore 64,1A minor income is clubbed in the hands of the parent, father. 11,500, 1,500 exemption. Very important, that point. So deductions also you should consider. If deduction information is given, you should consider that. Correct? Then 7,28,000 father income, mother income 6,88,000. That's it. I think we considered everything. Correct? Now tell me, interest income received by Deepika. Interest income received from Deepak, and interest on FD of Dhanvi would be included in whose hands? What? Natasha lent 6 lakhs to Deepika. Okay, fine. Okay, interest income received from Deepika, that is clubbed in the hands of the Deepak only. Yes or no? Minor income is also clubbed in the hands of the Deepak. Therefore, both interest to be included in the hands of Deepak only. Answer is A. Are you clear? Then, in whose hands business and capital gains would be included? Both loss from business and capital gains would be included in the hands of Deepak. Correct only? Assuming that capital invested in the business was entirely out of funds gifted by her husband. That's it. So the answer is again A. You don't have to look at. Okay? Natasha wrong. Loss from business in the hands of Natasha. Capital gains wrong. Therefore answer is A. Next, what would be the total income of Natasha? Oh my god. How much is the total income? Just to be computed. 6,88,000. That's it. So the answer is D. Look at the answers and tell me. Case scenario 2 inside that sub point 1. Option A. Look at the answer. Correct, huh? Second one. Capital gains is out of which income? Gifted income, huh? Hey, yeah. Correct, you know. That's accretion, no? Hey, we understood correctly, ma. I think here we put wrongly by mistake. We understood correctly. I mean, here out of hurry we just added it. Okay. Loss from PGBP, Deepak. Capital gains, yeah, correct. C only. Obvious. We added. You just look at the problem. We did the same. Okay, fine. Whereas this one 6,80,000, correct, huh? That's it. So which means first you total income. That's what you mean to be clear. After reducing chapter 6A, everything you should calculate total income of both the SSCs. Total income is net income after chapter 6A, after set of everything, but before adding minors income. Whose income is higher? That's the logic. Sometimes many students, what they do, you know, before reducing chapter 6 they compare. First we also did the same, but after that we immediately realized that ATC was there. Yes or no? So total income, it's not gross total income. Be careful. One new point that you learned. Yes or no? That's it. Good, no? Good question. Next, can I proceed further? So already we completed 12 marks. Yes or no? Into 2 minutes means 24 minutes. We completed the video almost 26 minutes. I mean, initial 2-3 minutes I gave introduction, all that. Okay, fine. So we are at pace. That too, I'm solving with explanation. If I don't have explanation, I'll finish it within some 18 minutes roughly. Next. Who among the following will qualify as a resident in the previous year? Appa. So 2 marks. Again, this is separate one. Huh? Okay, fine. I think let me solve fourth one. A firm pays salary and interest on capital to resident partner. The salary and interest paid fall within the limits under 40B. Which of the following statement is true? They are within the limits, ma. Tax to be deducted under 192, wrong. Tax to be 192, wrong. No taxes deducted, but taxes deducted, no. Taxes deducted, the answer is D. There's a new section which is added, 194T. Yes or no? So the answer is D. Fourth question, answer D. Huh? Easy, silly question. Next, we'll see this one. Mr. Pop, an Italian singer, came to visit to India to explore Indian classic singing on 15th September and left India on 1st December. For the past 4 years, he visited India for singing competition and stayed in India for 120 days each year. Remember, he is not an Indian citizen. Therefore, B2 condition can be applied. Visiting India 60 days or more in the current year. Yeah, in the current year 60 days or more he stayed, 15 September to 1st December. November fully he stayed, October fully he stayed, September some 15-16 days. So which is more than 60 plus last 4 years 480 days he stayed. So 60 days or more plus 365 days or more in the last 4 years. B2 condition satisfied. Resident. Yes or no? Now I want to see is he ROR or not. Now first I will look at A1. Yeah, 60 days or more every year he'll satisfied. Yes or no? Every year he's satisfying. Last 7 years, 120 into 7. Array, more than 730. A1, A2 also satisfied. He is ROR. Pope is ROR. Yes or no? Pope is ROR. Correct? Who will qualify as a resident? Yeah, Pope will qualify. Mr. Pop will qualify as a resident. Next, Mr. Abhishek, born and settled in Canada, means is a Canadian citizen. Visits India for 100 days to meet his parents and grandparents who are born in India, Indian origin, living in Delhi. His Indian income is 15,20,000. Okay, a person of Indian origin or Indian citizen visiting India for, yes or no, generally for a visitor B2 we will not apply. 60 days or more, 365 days or more logic we will not apply. However, if person of Indian origin or visiting India and having Indian source of income more than 15 lakhs and 120 days or more he visited in India and last 4 years he visited 365 days or more. But here 120 days logic he didn't satisfy. He just visited only for 100 days. Therefore he is a non-resident because 120 days criteria must be satisfied. B2 60 will not apply, but revised B2 120 will apply. 120 he didn't satisfy. Next, Mr. Joseph, an American scientist, left India to his home country for fixed employment there. So he left India for employment. He stayed in India for study and research medicine from 1st January 2022 1st July. Non-resident is. He's a non-resident. Why? First condition. Oh, wait a minute. An American scientist left India to his home country. Here, whether he is a Indian citizen or not, they didn't give that information. Okay, whether he is a Indian citizen or not, they didn't give the information. Technically, he's an American scientist, they said. So whether should I assume Indian citizen or not, that's the question. If I assume Indian citizen, no, 60 days or more, logic will not apply. If at all I assume that he is not an Indian citizen, then only B1, 182 days logic only will apply. As per that, he is a non-resident. I think, American scientist, I will take one more assumption. I will take, because they said American scientist, I assume that he is not an Indian citizen. If he is not an Indian citizen, B2 condition can be applied. If B2 is applicable, 60 days or more, logic is applicable, last 4 years, 365 or more, that also he is satisfied. So B2 is satisfied, therefore he is a resident. Yes or no? So Joseph and Mr. Pop, both of them are resident. What is the answer? Yeah, okay, which means here they have taken an assumption that he is not an Indian citizen, he is a foreign citizen. If at all Indian citizen is leaving India for employment, B2 condition we should not apply. If at all you take assumption of Indian citizen, B2 we will not apply. If B2 does not apply, 180 days logic only is applicable. B1 also not satisfied, therefore he will become non-resident. So which means the assumption that we should take is he is not a Indian citizen. Actually, the question is not clear. You just said American scientist, that's okay. You can become an American scientist even by becoming a scientist there in America, no problem at all. Yes or no? But because moreover Joseph name looks Indian name mostly. Yes or no? So Indian name only. So I think the question is not clear, but we took an assumption which went right. Yeah, to his home country, maybe, yeah, you can say that Indian citizen, because no, you can become, your home country can become foreign country also by taking citizenship there. Left India means what? He's staying in India, no? Don't interpret based on the assumption. The assumption is not clear. We have to take an assumption here based on the information given that he is an American citizen. He is not an Indian citizen. Are you clear? So you can't interpret indirectly based upon this that he is an American citizen, Indian citizen. Home country means what? If I settled in America, America will be my home country. Right now my home city is Chennai. Correct? That doesn't mean I'm a citizen of Chennai because I was born in Andhra. So you can't derive based on home country, based on American scientist designation, citizenship you can't derive. That's an assumption we should take. Are you clear? That's it. Able to understand? See, that's why I took a reasonable assumption. Based on this, I took a reasonable assumption, but that this is not how a question has to be tested. That's what I mean to say. They should give clearly is Indian citizen or not Indian citizen. At least they should give clue about the citizen. He was born in America. Obviously, American citizen. So that information was not given. That's something wrong. Okay. Here we took an assumption that he is not an Indian citizen, and the answer is of course right answer. Clear? Next. Over. Oh, 30 minutes. We completed correctly. 15 marks. MCQs. Every MCQ got the correct answer. Understood? Next. Can I continue solving? Okay. Just 2 minutes. Yeah. Let's do MTP1 related total income solving. Okay. Ayush, resident, 62 years. 80 TTB will be there. Remember. Now, other information. Oh my God, so much is there. Compute total income under both the regimes. Okay. First we will compute under default tax regime. Correct? Now, let's directly. He's a medical practitioner and they gave income and expenditure account. By default, we assume it is mercantile basis. Yes or no? What is the method of accounting? Did they give any information? No, nothing. They didn't give any information here. So we assume reasonably that he is following mercantile basis. Are you clear? Okay. Now, what is the net profit? 55,34,000. What is the net profit? PGBP income. Net profit 55,34,000. That's it. Okay. Now debits. Salary allowed, administrative allowed, rent allowed, conveyance allowed, power and fuel allowed, interest on housing loan. That is not a PGBP item. Yes or no? But I want to see, is the house fully used for business purpose? I mean, is it used personally? He completely for personal purpose or business purpose also used? I want to see that. He wants a residential. The reconstruction started. Okay. Was completed. Okay. After reconstruction, ground floor was self-occupied by him while the first floor was rented out. Both the floors are equal area. The monthly rent is, he took the housing loan. Okay. So there is no house property which is used for business purpose. Clinic equipment, tuition fee, availed loan, everything. That's it. So therefore, entire amount. Interest on loan. Yes or no? That's a house property head of income. How much is the disallowance? Entire 2,20,000. Yes or no? Guys, correct? Disallowed. Next. Interest on education loan. That's an 80E item. Interest on ATE related one, how much is that? 1,56,000. Remember, first we are computing tax under, yes or no? This is optional tax regime. This is optional tax regime and default tax regime, because let out portion is also there. Okay, that's it. Next, amount paid to scientific research disallowed, optional tax regime, yes or no? Under OTR we should consider, but under DTR we should disallow. 35 subsection 1 clause 2 scientific research, how much is the amount paid? Approved 1,50,000. So I will disallow. Correct? Guys, able to understand? Next one, then consultation taxable, salary received from True Hospital. That's a income from salaries income. How much is the salary received? 10,80,000. Okay, then rental income and then dividend minus rent. How much is the rent? 2,40,000. They gave you, the house was started for reconstruction, 6 months it took reconstruction, only 6 months they rented, monthly rent 40, 6 was a 2,40,000, amount is matching here. Able to understand? Next, then dividend minus dividend, how much is that? 60,000. That's it. So now we'll see further information. He's a working partner with hospital. Now he has undergone treatment. Okay, all that is fine. He owns a residential house. Other information. Yeah, look at the other information. Conveyance expense include a sum of 48 incurred for conveyance from house to True Care. That's an expenditure incurred for the purpose of employment. You should not claim it as a business. That's not a business expenditure. Therefore, it is disallowed. Yes or no? Everyone? Conveyance expense. How much more? 48,000. But remember, this amount you should remember, because no, here they might have given conveyance allowance. Okay, conveyance allowance is not there here, no problem. Here conveyance allowance they have not given. Transport allowance they give. That don't confuse with conveyance allowance. I told you, travel allowance, conveyance allowance, transport allowance, daily allowance. These are all different. Okay, next. Power and fuel expense include some 10,000 incurred for generator fuel for providing power backup to tenant. Entire 10,000 will be added back. Correct? Power backup, first of all, that's actually, house property expenditure. How much is the adding back? 10,000 rupees. And we should claim this as deduction under other sources. Because if you are collecting any amount of rent for power backup from the tenant, that amount is taxable under other sources. That's it. Okay. So this is an IFOS adjustment. Remember that. Administrative expense include 10,000 paid as municipal taxes per the house. Okay. Add back. Municipal taxes. How much is that? 10,000. That's it. Clinical equipment details are, okay, I think in the P&L account if you see, depreciation is not there. So we should now calculate. Opening WDV of the clinical equipment was 5 lakh. A fresh purchase was made on 28th August, which is more than 180 days per 75, which was paid in cash. Okay, actual cost will be 0. Yes or no? That's it. Only 5 lakhs into 15%. 75,000 is a depreciation. Am I right? Depreciation on clinical equipment. If they say life-saving medical equipment, then it is 40%. If they simply mention clinical equipment just like that, 15%. How much is the depreciation? 75,000. Agreed. Then he paid tuition fee, which has been debited to capital but not to P&L. Nothing to worry. Okay. So this is an ATC item, optional tax regime. He availed a loan of 25 from bank for higher education of his son. Repaid principal 3 lakhs interest. So again, this is ATC. This is under optional tax regime. So optional tax regime. I think everything we considered. I think now we are completely perfect to close PGBP head of income, right? So I'm closing PGBP head of income. What's the PGBP income now? So 55,34,000 plus 2,20,000 plus 1,56,000 plus 1,50,000 minus 10,80,000 minus 2,40,000 minus 60 plus 48,000 plus 10,000 plus 10,000 minus 75,000 is equal to 46,73,000. Am I right? Look at. So once I'll check it out. Okay. 5534, 2,20,000 add, 1,56,000 add, 1,50,000 minus I did. Okay, fine. 55,34,000 plus 2,20,000 plus 1,56,000 plus 1,50,000 minus 10,80,000 minus 2,40,000 minus 60 plus 48,000 plus 20,000 minus 75,000 is equal to correct only 4673 correct only. Okay. Now next one, income from salary. I'll compute income from salary. Can I? So he's working in a True Care hospital, 85,000 per month. I'll directly compute you. So how much is the income from salary? Income from salary 85,000 into 12. So gross salary, I mean this one, basic salary 10 lakh 20. Then transport allowance 5,000 into 12 for deaf, dumb, disabled employee, you will get 3,200 per month exemption. Is there any information regarding that? Who is qualified medical practitioner, runs his own clinic, no information on his disability, therefore fully taxable. Yes or no? 60,000. Remember, first we are computing under default tax regime. So therefore 10 lakh 80,000. His son had undergone medical treatment in the same hospital free of cost. The hospital charged a sum. It doesn't matter. In the same hospital for employee and dependents, no problem. It is fully exempted. Therefore, minus stand deduction 75,000, 10 lakh, 5,000 is income from salary. Agreed. Yes or no? 10 lakh 5,000. So 10 lakh 5,000 income from salary. Next one. He owns a residential house. The reconstruction of the house started on 1st April and was completed on 30th September. Yes or no? The after reconstruction, ground floor of the house is self-occupied by him, while the first floor has been rented out since 1st October 2025. Both the floors are of equal area. The monthly rent is 40 and the tenant also pays 3,000 per month as power backup charges. He took a housing loan. A similar question was there in our question bank. Total income problem. Okay, power backup point. He took a housing loan of 25 lakhs for reconstruction on 1st April. Interest on the loan for that period of 6 months was 1 lakh 20 and for the balance period was 1 lakh. So total interest was 2.2 lakh. This is what debited to P&L account. We already disallowed there. Yes or no? He also paid municipal taxes of 5,000, and 5,000. During this year, he paid totally 10,000 related to 2 different years. Doesn't matter. MTP paid is allowed as deduction on cash basis. Correct? Now, income from house property. Income from house property. So here, ground floor, yes or no? Then first floor. I will apply gross annual value minus municipal taxes paid, net annual value minus 30% minus interest on loan. Correct? So, ground floor is self-occupied. First floor was rented out. Correct. Ground floor is self-occupied. So, NAV is equal to 0. First floor was rented at 40,000 per month. 2,40,000. And municipal taxes paid is 10,000 for both the floors put together. For first floor, I will claim 5,000. 2,35,000 I will claim. And if you remember, 30% is nothing. 2,35,000. 2,35,000 into 30%. How much is that? 70,500. Correct? Interest on loan 2,20,000 I incur. Therefore, for let out portion 1,10,000 I will claim without any limit. Without any limit, I will apply to let out property. No conditions. Purchaser, repairer, doesn't matter. It's an interest on loan I spend. Now, whereas for NAV is equal to 0, default tax regime, no deduction for interest at all. Therefore, income from house property. Income from house property 0 and 2,35,000 minus 30%. Sorry, 2,35,000 minus 30% minus 1,10,000 is equal to 54,500. So house property income 54,500. And if you remember, if it is optional tax regime, here 30,000 I will reduce. 1,10,000 will be their interest. But since it's not for purchase or construction, since it is for reconstruction, maximum reduction will be 30,000. Since maximum reduction 30,000, loss will be 30,000. The OTR income would be 24,500. Am I right? Yes or no? But fine. I'll come back to it later. Okay, fine. Next one. Next one. Remember, other sources is also there, ma. Income from other sources. First one, dividend income. What is the dividend income? 60,000 is there in the P&L credit side if you see. Yes or no? Then power backup related, what we are getting from tenant, 3,000 rupees per month only for 6 months, ma. 18,000, correct? Minus power backup related expenditure, how much? 10,000 we spent. You see here, IFO is 10,000 incurred for generator fuel for providing backup to the tenant. Only for tenant related portion 10,000. Yes or no? So therefore, how much is the amount? 8,000. Therefore, total other sources income 68,000. Until now, clear. Now let me check and finalize it. This is 80C OTR only. This is 80E OTR only. Municipal taxes considered. This information considered. Yes, I can now close gross total income. Yes or no? Gross total income, how much? Only income they're asking, a tax liability also. PGBP 46,73,000 plus salary 10 lakh 5,000 plus house property 54,500 plus other sources 68,000. Do you all agree? This one, this one, this one, and this one. Okay. So what is the income? Gross total income 58 lakh 500 rupees. That's it. And now there is no JJAA, 80CCD, 80CCH. Nothing is there. Clear, all of you? Therefore, this itself is total income under default tax regime. And by the way, what is the question that they're asking? They're asking only total income. No need to compute tax liability, which is very easy. Yes or no? Now, I will compute under optional tax regime. Can I? This is default tax regime. Now, I will compute. Under house property, I can claim house property interest. Remember, self-occupied property, 30,000 I can claim. Interest related to self-occupied portion, ground floor is 1,10,000 ma. But since it is for reconstruction, not purchase or construction, maximum interest allowable is 30,000. So 30,000 minus house, 30,000 you just claim it. That's enough. Minus we have some 80, OTR adjustment, interest on loan. Okay, I will consider. Interest on education loan, I will consider. Amount paid to scientific research, 1,50,000. 35 subsection 1 clause 2. How much is that? 1,50,000. Then she has, so all this is there. Optional tax regime, no. We should add back deduction, standard deduction 25,000 we should add back, because in optional tax regime only 50,000 you get deduction, whereas we already reduced 75. So we should add back 75, reduce 50, which means add back net effect 25,000. Agreed. Next one. Okay, here only. Next one. ATC, tuition fee 40,000 is there. Yes or no? Principal repayment point, did they mention? Interest on loan only they mentioned. They didn't mention principal repayment. By the way, principal repayment you get only when you repay for purchase or construction, not for reconstruction. ATC you won't get for reconstruction. Okay, I think fine. That's it. Now, anyhow, principal repayment information is not given. So 40,000 tuition fee which is debited to P&L. So ATC again. Wait. It was for grandchildren. 1 minute. Where is it? No. Only children allowed. No. Yeah. Very good observation. No granddaughter. Granddaughter is not allowed. So be careful. You have to read the entire sentence. Tuition fee for granddaughter, correct? And higher education for his son. Son is allowed. Interest 1,50,000 rupees is what paid. Correct? Huh? Yeah. 1,56,80E. Correct? Huh? This is allowed. Correct? Huh? How much is that? 1,56,000. I think all the OTR adjustments we considered. Correct? Huh? 58,500 minus 30,000 minus 1,50,000 plus 25,000 minus 1,56,000 is equal to 54,89,500. What is the answer? Matching, both are right. That's it. Over. Exactly presented in 14 minutes with explanation. Another 15 minutes is what it takes for neatly presenting the entire answer. Once you derive the answer, you know how to present it. It hardly takes 15 minutes because you already have the answer entirely in the mind. You just have to copy paste it. You see, first time I'm solving directly right answers. It's because, not because how many sums I solved, it's because the provisions I remember. And I remember how to apply the provisions. Clear? Next. You see the speed at which I'm solving. Understood? That speed you can develop only when you have tremendous grip on the provision. And how to get grip on the provision? Read the provision. Apply the provision. Know how to apply it correctly. Not solving 1,000 problems. Clear? Next. That's it. So, fine. We'll take a small break and get back and then continue the remaining part. Let's continue the second question. So, Mr. Dhruv, an Indian citizen, 32 years, central government officer, serving in the Ministry of Corporate Affairs, left India for the first time on 31st March. Before 1st April, he left. Okay. And what is the income that they're asking, by the way? Total income under optional tax regime. Okay. That's it. Fine. So, he left India before 31st March. Due to transfer to High Commission, he did not visit India during this year. Therefore, he is directly a non-resident. Current year, there is no stay at all. Therefore, he is directly a non-resident. But remember, he is an Indian citizen. Okay? Outside India. If at all Indian source income is more than 15 lakh, then he might be a deemed resident. So that we need to look at. Yes or no? Fine. Look at. He received following income for the previous year. Salary received for services rendered in London. Yes or no? 20 lakh. Yes or no? Next. Foreign allowances. Allowances paid to Indian citizen by Government of India outside India is exempt, not taxable. Yes or no? Then interest on savings bank deposit. By the way, this is income deemed to accrue in India. Salary paid by Government of India to a Indian citizen outside India. That's deemed to accrue or arise in India. So it's an Indian source of income. Already more than 15 lakh. Therefore, he is an Indian citizen, getting Indian income, yes or no, more than 15 lakh. Therefore, he is a deemed resident by default. But they are not asking that. Anyhow, they are asking total income computation, deemed resident. Interest on savings bank deposit, source is in India, fully taxable. Correct? Remember, it's a savings bank deposit, 32 years only. Therefore, 10,000 rupees deduction will be there under 80 TTA. Correct? Next, short-term capital gain on sale of Indian shares, Indian shares directly. Therefore, STCG 111A taxable in India. Dividend from Indian company taxable in IFOS. Rent from property in London, deposited in a bank in London. Source is outside, receipt is outside. He is just an RNOR. Deemed resident is an RNOR. Yes or no? He is not ROR. RNOR. For RNOR, Indian income, source in India or receipt in India, only then it is taxable. Here both are outside, not at all taxable. Able to understand? So what is the total income? Tell me. So 20 lakh plus 1 lakh. Correct? 21 lakh. 21 plus 2. 23. 23.5 lakh minus 10,000. Chapter 6A. 23.4 lakh. That's it. What is the answer given? 6 marks question. Correct? Deemed resident logic they gave? Did they give about note about deemed resident logic? They didn't talk anything about resident status, right? Then fine, leave it. Easy? Hardly 2 minutes. Correct? You understood everything. Foreign allowances are exempted. Okay? I think the section is 10 clause 7. Correct? 10 clause 7. Any allowances paid outside India to an Indian citizen by the government of India is fully exempted. Indian citizen only is exempted. If at all allowance was paid to a foreign citizen outside India for a working in embassy, for him it is taxable fully. Clear? Next. Then, can I compute further? Next one. Examine applicability of TDS or TCS for the assessment due in the independent situation. Two situations they gave. XYZ Limited paid 75,000 rent plus 18% GST for office premises from 1st April to 31st March. It's a company, therefore 194I is applicable. Per month rent is more than 50,000. Therefore, every month you need to deduct TDS at 10%. Mr. Raja has furnished his PAN and also filed his return of income before the due date regularly. Yes or no? So, this income, whether he filed regularly or not, doesn't matter. That's an unnecessary information which is given. That doesn't matter because return of income filed regularly or not, 206 AB, so no, that section was removed. Earlier, for non-filers, higher rate of TDS will be applicable. But now that section was removed. Okay, he furnished PAN number, therefore 10%. 75,000 into 12 months into 10%. 75 into 4, 3 lakhs. 3 into 4, 12. 12 lakhs into 10%. No, sorry. How much is that? 75 lakhs, 75,000 into 12 months into 10%. 90,000 is a TDS. Correct? GST component TDS will not apply. Yes or no? Next. ABC sells 2 cars to Shilpa costing 4 lakh and 12 lakhs respectively on 1st May and then 25th December. Mrs. Shilpa has furnished PAN and filed return of income before IT return. A company is selling 2 cars. Yes or no? On the second car which she is selling, where since the selling price of the car is more than 10 lakh, she has to collect TCS at 1% under 1F. 206C clause 1F, subsection 1F or clause 1F. Under that section, she need to collect TCS at 1%. Are you clear? Yes or no? It's a company SSC, therefore automatically TCS provisions will apply. Understood? So tell me, what is the answer? So here 12,000. Here 12,000 TCS. Correct? First question 90,000 TDS. Is it correct? Answer please check and tell me. First question 90,000 TDS. Correct? Second question 12,000 TCS. Correct? Because no, when you are selling 1F under 1F no, per transaction 10 lakhs limit. It's not per annum 10 lakhs limit. It's per transaction. Hello? Correct? Second question 12,000 TCS correct only 1F. That's it, over. Next. I thought it'll take much more time. Answer, the paper is about to over. That's it. We completed 10 marks questions in just 4.5 minutes. 5 minutes. Next. Okay, unit 1, unit 2, something like the slump sale information they gave. Doesn't matter, very easy. Compute capital gains. Shall I compute? Okay, now look at slump sale bar. There is no link with capital gains as the only head of income, no link with regime. It doesn't matter which regime. The computational logics, everything is same. And moreover, slump sale. 50C. Within slump sale itself is a separate mechanism in the entire capital gains set of income. Slump sale does not have any link with other provisions of capital gains. Clear? Next. Because the slump sale, what is the capital asset for slump sale? They defined it. What is the period of holding? 36 months. They defined it. How to compute capital gain? 50C itself defining it. Generally, how to compute capital gain? 4850 section applicable. And what is the period of holding? 2 subsection 42A is applicable. Indexation 4855, all that is applicable. So there are multiple sections deals with provisions of computation of capital gain, but slump sale is the only section where everything is discussed within the same section. So technically slump sale is something different from capital gains. You can say it is capital gains too. A separate chapter you can keep it, technically speaking. Fine, look at Mr. Shivam is proprietor of a Star Stores having 2 units. On 1st April, he transferred unit 2, which he started in 1415 by way of slump sale for a total consideration of 18 lakhs. The professional fee brokerage paid for transfer are 78,000. His balance sheet is as below. You know what is the sale consideration? Fair market value of capital asset transferred on the slump sale is 18 lakh 10,000. Whereas consideration received is how much? 18 lakh. Whichever is higher. Fair market value of the assets transferred under slump sale or consideration, whichever is higher, that will be taken as full value of consideration. Am I right? So first one, full value of consideration is equal to 18 lakh 10,000 minus transfer expenses. How much they gave? 78,000. Correct? Therefore, net consideration how much? 17 lakh 32,000. Correct? That's it. Minus cost of acquisition and cost of improvement. Working note 1. What is cost of acquisition and improvement in case of slump sale? Net worth of the undertaking transferred. How to calculate net worth of the undertaking? Assets minus outside liabilities. Assets, what values you should take? Depreciable assets, take income tax written down values. Non-depreciable assets, take balance sheet value before revaluation. That's it. Minus outside liabilities, you get net worth. Understood or not? Now look at. So, unit 2 he transferred, remember? Is there any revaluation reserve? Oh, revaluation reserve 2.5 lakh is there. Now how this revaluation reserve was created? Land of unit 2. Okay, land of unit 2 was purchased at 5 lakh and revalued at 7 lakh 50, which means the 2.5 lakh revaluation reserve is there, right? This is belonging to unit 2 land. Before revaluation, unit 2, right now I'm computing net worth, net worth computation. Land before revaluation, how much of unit 2? 5 lakh, yes or no? So land I considered. Furniture is a depreciable asset. I should not take balance sheet value. I should take written down value as per 43 subsection 6. Understood? Next, debtors. Yeah, I can absolutely take book value. Now, but I'll see whether any provision is given, any adjustment is given for debtors. No adjustment, so I will take book value. How much is the debtors? How much? 3 lakh 50,000. 3 lakh 50,000. Then furniture, I have to take section 32, read with 43 subsection 6 value. Then patent, I have to take, yes or no? I have to take the same value. Correct? Minus. So these two I will compute later. Minus outside liabilities. Bank loan, 70% is for unit 1, means 30% is for unit 2. Remember, unit 2 is what they transferred bar. It's not unit 1. So 30%, 8 lakh 50 into 30%, how much it is? 2 lakh. 2 lakh 55,000 bank loan. Okay, 2 lakh 55,000. By the way, what am I computing? Net worth. Why am I computing? Because that's a cost of acquisition and improvement. Yes or no? Then trade creditors, 90,000. Correct? 4 lakh 50 into 20% pertaining to unit 2. How much is that? Creditors, how much is that? 90,000. Then unsecured loan, 30%, 1 lakh 20. Correct? Loan, 1 lakh 20,000 is belonging to unit 2. Correct? That's it. Once you compute all this, you will get the net worth. Now furniture, some information is given at the next page. Land, unit 2 considered. No individual value is considered. Yeah, correct. This is one of the condition for slump sale. Individual value of asset you should not consider in the sale deed. In sale deed, unit 2 is what you are selling. What are all there within the unit 2? You might list out the asset and list out the values also, no problem. But that is not the basis. Actually, I told in capital gains topic, in my regular class also clearly I told, slump sale is actually taxation of goodwill. Because tell me, in amalgamation you might have done CA inter. Sale value minus purchase consideration minus net worth is equal to goodwill or capital reserve. Here, sale value minus net worth is equal to what? Goodwill. So slum sale is basically goodwill taxation. If you are selling a business, you definitely charge something extra beyond the net worth. That extra amount is nothing but, in accounting language we call it as goodwill. Are you clear? So slum sale is nothing but goodwill taxation. That's it. This I tell in my regular class clearly. Okay, next. You should understand. That's how deeper you should understand the concepts. Clear? Now look at patents, they were acquired on 1st December 2023, on which no depreciation is provided. What is the cost of the patent? 7,25,000, correct? So cost of the patent, look at 7,25,000. Remember, it was purchased in 23-24. In that year, it was used for less than 180 days. 7,25,000 into 25% divided by 2. So first year depreciation is 90,625. So WDV value on 31st March 24 will be 7,25,000 is equal to 6,34,375. Now again, 24-25 depreciation. How much is that? 1,58,594. So WDV value on 31st March 25. 6,34,375 minus 1,58,594 is equal to how much is the written down value? 4,75,781. Now 31st March 26, before this 31st March 26 came itself, slum sale happened. Therefore for 25-26 no depreciation at all. Remember, we should calculate depreciation under income tax on 31st March. This is the point I told in the marathon as well as in my regular class. Depreciation we compute in income tax for a particular block only on 31st March. We will not compute on any day. It is only on 31st March of the previous year we should calculate. On 31st March if block is existing, on 31st March if value is existing, then I will calculate depreciation. 31st March not yet came. First April itself asset is sold. Therefore, this is the value of the asset. So for patent, what is the value of the patent? 4,75,000. What is it? 4,75,781. Then now furniture. So now furniture. Look at furniture of unit 2, 5 lakhs were purchased on 1st December 2024, on which no depreciation. Are 5 lakh minus 5% over 4,75,000 furniture value, correct? 24-25 year it purchased. Less than 180 days it is used. Therefore 10% into 1 by 2. 5 lakhs into 10% into 1 by 2. 5% is equal to 25,000 depreciation. Therefore, what is the written down value of the furniture? That's it. Correct? So what is the net worth now? Calculate. 5 lakh plus 3 lakh 50 plus 4 lakh 75,000 plus 4 lakh 75, 781 minus 2 lakh 55,000. Correct? Bank loan 2 lakh 55 only. Minus 90,000 minus 1 lakh 20. So net worth is 13 lakh 35,781. So that I will reduce 13 lakh 35,781. Now I get a capital gain. 17 lakh 32,000 is equal to 3,96,219 capital gain. Now is it long term or short term? When the undertaking was started, 2000 unit 2, 14-15 it started and we sold it on 1st April 2025. The gap is more than 36 months. For slump sale it is 36 months criteria, not 24, not 12, 36. Therefore it's a long term capital gain. That's it. Check the answer. Matching? Yes or no? That's it. Able to understand. How to solve, you're able to understand. That's it. Next. Array, about to over, man. I already secured 50 marks out of 50 already. Yes or no? 15 marks I solved, 10 marks I already solved, 30, and already choice I'm solving. Actually no, I'm solving choice technically. Yes or no? So 50 of 50. You understood? Next one. From the following, calculate the taxable amount under proper head of income for the year 25-26 of Lalit, who is resident 56 years old. He is paying tax on a DTR. The reason should form part of the answer. You just have to calculate taxable income under proper head. Dividend 45,000 is what received. That too it is net. Therefore under IFOS 10% right dividend. So 50,000 is taxable. Correct? Advance forfeited 1 lakh on 1st May as the negotiation. This is also taxable under IFOS. Correct? 56 subsection to clause number 9. Next, cash gift received from non-relative on the occasion of marriage of son. So since it is son's marriage, not the SSC marriage, 51,000 is fully taxable under IFOS. Correct? Here there is an alternative assumption. SSC took it as a mediator and then gave it to the son. Then in such a case, in the SSC it is not taxable. Son, it is also not taxable because it is on the occasion of marriage. That's an alternative assumption. Okay. Next. He received 99,000 as a pension from the employer. This is called family pension. 1/3 of the family pension, 33,000 or 25,000, whichever is lower. 25,000 is exempted. 99,000 minus 25,000, 74,000 is taxable under IFOS. Correct? Now tell me, 50,000 plus 1 lakh plus 51,000 plus 74,000. One alternative, the answer is 2,75,000. Answer over. What is the answer given? That's it. IFOS. Clear? Understood? Next one. Can I proceed? Mr. Shashank is retired from a public sector undertaking. Okay. He resides in Ujjain. He provides the following particulars of his income and certain payments or investments for the year 25-26. Okay. Retired. Okay. He resides in Ujjain and provides you. What is the question that they're asking? Oh my God, so much. Compute total income of Shashank for the assessment year under optional tax regime. Okay, fine. It's predominantly donation based section. Donations is what major focus is on. Okay, fine. I'll directly compute it. I think now we are solving choice, no? Yeah, now we are solving the choice. Oh, so which means I secured already 50 out of 50. So now extra choice. That also I'll solve, no problem. Look at. So what is the pension income? How much is the pension? This is income from salary. Yes or no? 7,80,000. Then interest on FD. That I will look at later. Standard deduction 50,000. Therefore, salary income is 7,30,000. Then IFO is interest on FD 67 years. Therefore, 80 TTB will be there. Remember that. How much is interest on FD? So IFO is 2,35,000. I think there is no other income. LIC premium, paid interest. That's it. Therefore, 9,65,000 is gross total income minus 80 TTB. First I will reduce because I will forget it. Okay, 50,000. Then look at the premiums paid. Life insurance premium for his life 25,500. Policy was taken on 2020. Sum issued 2,50,000. So 10% maximum. So which is 25,000. ATC life insurance premium 25. I will list in inner column. Okay. Then premium 36,000 paid for by check. Okay. This is preventive health checkup. This is ATE. Donated by check. Okay, fine. I think ATC is closed. So how much is that? 25,000. Now 80D point is there. Look at this. Preventive health checkup for mother age 90 years and preventive health checkup for his age for him is this much. How much it is? 3,500. Now ATG category 2 for mother I will claim 4,500. For this SSC I will claim 500. Because for preventive health checkup maximum reduction for category 1 and 2 put together is 5,000. Moreover, here SSC is a senior citizen, 50,000 if applicable as a whole for category 1. Senior parents, 50,000 if separately applicable for category 2. So now look at category 1. 36,000 paid by check for health insurance of his self and spouse. Also senior. Okay, 36,000 I can happily claim. Correct? Correct? Then did he pay any loan? That's it. Over. So the answer is what? So 41,000. Correct? 80D answer 41,000. Next, paid interest of 9,500 on loan taken for MBA course by his daughter 9,580E. How much is the interest on loan? 9,500. A sum of 95 donated by check to institution. Okay, this is family planning category 3. Yes or no? This is a family planning category 3. Correct? Yeah. Whereas 20,000, this is category 1. Okay, fine. ATG, before ATG, how much is the total income? Adjusted total income, I'm finding it out directly. Okay, I'm finding out adjusted total income. 9,65,000 minus 50,000 minus 25,000 minus 41,000. Huh? Yeah, so therefore adjusted total income 8,39,500 minus category 1 of ATG. How much is the PM CARES fund? Check only. 20,000. Yes or no? Now category 3 donation. How much is category 3 donation? 95,000 they paid. Okay, and 95 paid. Adjusted total income 10%. Oh my God. 10% how much? 83,950. But category 3 they paid how much? restricted to 83,950 into 100%. Correct? 83,950. Appa, critical. Correctly they gave. Correct? Now look at what is the total income. 8,39,500 minus 20,000 minus 83,950. Therefore, the 7,35,550 is the total income. Over answer. Correct? See, able to understand. You should be very tremendously powerful. You should remember very well the provisions at every place. Then you will get the right answer. Clear, all of you? That's it. I'm proceeding further. All of you. Okay. Next. In each of the following situations, you are required to examine whether these persons are required to file the return of income or loss. If their total income does not exceed. Okay, they said total income is not exceeding basic exemption limit. Then generally they don't have to file IT return. However, if they have entered into any specified transactions, they have to file IT return. Yes or no? Now, Mr. Dilip has a savings account with SBI and HFA and a current account in Axis Bank with opening balance 20 lakh, 10 lakh and 30 lakh respectively. He deposited 40 lakh in SBI, 25 lakh in HDFC, 75 lakhs in total deposits in savings account. Two savings accounts were there. In two savings accounts put together, total deposits is more than 50 lakh. And in current account, deposit is less than 1 crore. But savings account deposit is more than 50 lakh, right? He entered a specified class of SSC income. He has to file return of income. Yes or no? Remember, I gave one page. Entire return of income provision I gave in just one page. I'll show you. Look at this. Who has to file return of income? 5 categories of SSS has to file return of income. Special SSS. Who? Deposit in savings account 50 lakh or more. Able to understand? So they have to file how much more? So they have to file. The answer is yes. Correct? Let's check the answer once. Check the answer once. Yes, correct only. Huh? Deposit in savings accounts. It may be one account or multiple account, doesn't matter. Okay, all savings accounts put together. See, intention of the law, understand. If at all you are dealing with huge money, then you must file IT return. That is the intention of the law. If a customer deposited in multiple accounts where in each account it is less than 50, he is defeating the law intention. So what could be the intention of the law? One or more. Sometimes in the provision that wordings might not be clear. But look at the interpretation, reasonable interpretation, and then understand the intention of the law, why it was brought, and then you have to decide the answer. Clear? That's it. So he has to file. Then second scenario, Kumar, 50 years, has withdrawn cash of 1 crore 15 lakh during the year from his savings account in HDFC. Mr. Kumar regularly files his return of income. Wonderful. Normal citizen, 15 lakhs extra he withdrawn, 2% TCS will apply, TDS will apply, which means 30,000 bank would have deducted TDS. In special cases, others 25,000 or more TDS is there. If at all, they have to file IT return. See, in both these cases, income is not exceeding basic exemption limit, but their banking transactions are so high that they need to file return of income. Second case, they didn't give any information. 1 crore 15 lakhs he withdrawn and he's a regular filer, but 1 crore if at all he crossed with one bank would have deducted TDS at 2% under 194 yen. For amount exceeding 1 crore, 15 lakh into 2%, 30,000. So TDS aggregate amount is 30,000. Now if the aggregate TDS is 25,000 or more, then he must file IT return. Very good actually. Good question actually. So the answer is yes. Over. Correct? The reasons also correctly stated there. 194 and 30,000 TDS logic, they correctly mentioned it. Then fine. Clear. Next. Another 4 marks question. Mr. Vineet exercises the option of shifting out of default tax regime, so OTR, and submits his return of income under optional tax regime on 12th July 2026 for the assessment year. Okay, consisting of income under salary, income from house property, and bank interest. Okay, he filed the return of income within the due date, no problem. On 21st December, he realized that he has not claimed deduction under 80 TTA in respect of interest income. He wants to revise the return. Yeah, he can revise it. No problem. A person can revise his return of income 3 months prior to the end of the assessment year or completion of assessment, whichever is earlier, 139 subsection 5. And accordingly, in the given case, he wants to revise the return of income on 21st December well within the due date. Therefore, he can revise the return of income by claiming 80 TTA deduction. Second question. Examine. Would your answer be different if he discovered this omission on 21st March? time limit is over for revised return, therefore he cannot revise it, but he can file an updated return. But updated return you can file only when there is an increase in tax or increase in income. You can't file an updated return for decrease. So if the due date is on 21st March, you can't file a revised return. That's it. Answer over. Easy or not? Yes or no? So with the choice 4, 4, 8 plus 6, 14 marks. So 50 marks without choice we solved, plus 14, 64 marks of the paper we solved fully with dot 64 out of 64. Are you clear? So you can get full on full in income tax if you're clear with provisions. Confident? Everybody? That's it. That's it. So now, then we'll continue with MTP 2. Easy. So that's it. So with this MTP 1 is over. So we are able to solve this entirely with explanation, with the choice, less than 1.5 hours. So with choice, with explanation, in fact, in exam, you can happily write this kind of paper within 1.5 hours without choice for 50 on 50 with proper presentation. Okay. You're able to understand how I'm applying all the provisions. So only when you remember all the provisions thoroughly, only when you understand them thoroughly and able to sync at correct places, so your answer will obviously be correct. The moment you see withdrawal, immediately TDS mechanism should strike, cash withdrawal. So that's how you should read. That's how. So any word, something similar you find somewhere, immediately it should strike. For that, the only way is practice. That's it. You know, like how do I get this much grip on the provision? The method I'll tell you. When I'm preparing, what I do, I take IC material. I also look at the act provision. I'm looking at the act just for the sake of more clarity. We are not lawyers to interpret and then read bare act and decode it. Many of us sometimes unknowingly try to over-interpret the provisions by forgetting our role as a chartered accountant. We are CS, not lawyers. We don't need to learn interpretation in depth. We need to learn the application of the provision in depth. That alone, if you are able to have, that's enough. So I'll see ICA material, I'll see act. Then I will solve illustrations and TYK. Okay. And I will also solve MTPs. Whatever MTPs available, I'll solve once. Generally, when I'm making the material, what I do, MCQ booklet of ICA, I will solve it fully through the class only. Okay. Through the class only, I will be solving. Then I will incorporate all those points in my second version of my material. First version of a material, most of the points will be there. But my second version of material, if you see, where all observations, everything that I would have learned, no, where and all we do generally mistakes, all those I will add it as a concept points. Since I have solved earlier itself enormous number of problems and I have applied it very well, the provision already, you give me any new problem, it doesn't affect me. For me, it doesn't matter, new problem. You give me new problem, total income, maximum I'll solve it in 8-9 minutes. Entire problem I'll solve within 8-9 minutes, whatever the size of the problem. Provided it will be asked in exam for 15 marks question. Such a kind of questions you give me, 8 to 10 minutes maximum I'll solve with 90% accuracy without any doubt. Maximum 100% undoubtedly. Exceptional scenario, unless they take a different assumption based on the letter of the question given, if at all they're taking a different assumption altogether, only there my answer might mismatch. But 99.99% my answer will be right. Able to. So that's because that speed I developed only because I learned the provision, I solved already plenty of questions, and I developed my material based on that. So the way I remember the provision will be much more deeper than a student who is reading and revising, because I'm also explaining. That is also one of the way, because you know what, when you read, when you try to read and study and absorb, that requires very low level of intensity. When I have to explain, my mind thinks much more deeper. So that's the reason you want to excel in anything. There is a saying, you want to learn any subject excellently, start explaining to others. Because the moment you start explaining to others, your mind thinks rigorously and it will find gaps. Then your mind start thinking about those gaps and the clarity will be built up slowly. So that's why the kind of clarity which a teacher will have will never be having for the student. It will never be. Can a student get the same level of clarity like a teacher? Definitely not. Nobody. Even a practicing CA who is fully into the income tax, he will not have that clarity. Not even 30% of the clarity what teacher has. Because teaching, that gives you the power of thinking. It enhances your thinking like anything. That's why nowadays every business owner, almost every motivator, influencer, they says, you want to do any business, do content. Why you need to do content? Not just for the sake of letting others know that you exist, but for you to discover your own gaps. Because the moment you start talking, your brain performs very, very powerful. The functioning of the brain will be very powerful. So you want to really, improve your intelligence and everything, you have to talk, you have to explain others what you're doing. The more you explain, the more you're trying to teach somebody, your clarity enhances like anything. You see, politicians and all, they live longest. Politicians is the one who live longest. You see, you won't see any politician who died at 40. Show me one politician who has cardiac arrest and then died. Show me recently, in the last 2-3 years, show me one politician who has died with cardiac arrest, heart attack. You take Pranab Mukherjee, you take Vajpayee, every one of them expired somewhere around 85, 90, 95 age. You take any politician in India, because politics is one game. You think politician is stressful. Yes, he is stressful, and that's the reason he is living long. If your mind is relaxed, your body is relaxed, your lifespan reduces. If your body is continuously moving, mobility, and if your mind is continuously stimulating, okay, you live longer. That's why politicians, even though they are very obese, all that, still they do high level of performance, because their mind is continuously thinking. They're meeting so many people. They're having a very strong purpose in their life. Yes or no? They want to win always. That purpose is there. Continuously thinking, continuously meeting so many people, rallies, they live longer. Able to? I think that's the longest living profession. And then another longest living profession, teachers. Because they're continuously, like, it's a very physical activity. Teaching is a very hardworking activity, physical activity, and continuously we should think. So those who really think better, those who are continuously thinking strongly, sharply, and then physically active, so their lifespan will be very high. No need to, politicians and all eat all worst foods sometimes, especially in election rallies and all. They'll have to travel, meet so many people, so many homes they need to go. Everywhere they'll offer coffee or tea, they will have it. Understood? Fine. So that's it. So shall we do MTP2 now? Yeah, let's look at. So MTP2, first we'll solve MCQs. Okay. Next. So first one, Saksham 50 years, CEO. Okay, he's an employee. Salaried income is there. Then I will see following information given below. Most appropriate answer to the question. What regime, ma? Did they mention anywhere regime? If nothing is mentioned, it's a default tax regime. If nothing is mentioned, it's a default tax regime. Okay, fine. That's it. What would be the amount of deduction available to Chapter 6A if at all he exercised option of OTR? Okay, under OTR also they're asking. Again OTR. What is the total income under OTR they're asking? And what is the tax liability? Under DTR. So many questions. 6 questions are 12 marks MCQ. Oh my god. Tax liability under OTR. So you should compute total income under DTR, OTR, everything. So because 12 marks question, no. Typically they're asking both the regimes and tax liability. Correct? Fine. Fatafat will do. Look at. So first I'm computing tax under. First I'm computing DTR. Okay. So first I'm computing DTR. Okay. Now tell me, what is his salary income under DTR now? Salary 45 lakhs. Correct? 45 lakhs. Now during the year he earned the following 45 lakhs. They didn't say it is computed. Therefore I will assume it is without computation before. Even they didn't mention income from salary. This is bit risk only technically, because no, we don't know whether they took that assumption as computed or not computed. We don't know. Okay. What they mentioned during there, he earned the following income, they said. Worst fellows. Fine. I will take an assumption that it is not computed. So I will give moreover they are asking DTR, OTR both also. So definitely they'll be testing standard deduction point. On that logic I'm taking it is not computed. Therefore net salary is 44 lakh 25,000. This is income from salary. Correct? They should have given clearly, no? They should have given at least gross salary word. That would have been much more. That would have made much more sense. Fine. Long-term capital gain on sale of listed shares amounting to 6 lakh 54. Appa long-term capital gain was there, ma. See, long-term capital gain 112A. How much it is? 6 lakh 54. That's it. Next, dividend income gross. How much it is? What is the dividend income? 12 lakhs. Okay. Next one. Interest on savings account. Remember, this is optional tax regime. Here also optional tax regime adjustment is there. Yes or no? So, what is the age? 50 only. So, 80 TTA under OTR will be there. But right now it is income from other sources. Correct? SB interest. How much, ma? How much is that? 16,000. Actually, the question is a bit challenging only. It's not easy. Okay. Interest on FD. Yeah. 45,000. No problem. How much is the interest on FD? 45,000. Then Saksham has made following payments: medical expenses, treatment of his mother, okay, ATD, multiple insurance policies, okay, other sources, one more income is there. These are all chapter 6 deduction, ma. This is optional tax regime only. Okay. Now he has multiple insurance policies. The details of such policies are given below. Appa. After 1st April 2023, that logic is applicable. Fine, no problem. So date of issue, annual premium 40, sum issued 50. So date of issue less than 10%, consideration received is exempted under 1010D. Hello. Now multiple policies he bought on or after 1st April 2022. Okay, this is 1st March 2023. Okay, fine. Sum issue 2 crore, 80,000 annual premium. Again, this is exempted 1010D. So X and B exempted. Now there are 3 policies he has taken on or after 1st April 2023, and all the 3 policies premium put together exceeding 5 lakh. Then at the option of the SSE, those policies where aggregate premium does not exceed 5 lakh, where aggregate premium does not exceed 5 lakh, that will be exempted, provided premium for those policies is less than 10%. Now, first of all, is this less than 10%? Yes. Is this less than 10%? Yes. Is this? Yes. In all these 3 cases, 10% criteria satisfied. But all these 3 put together, they're exceeding 5 lakh. Then up to 5 lakhs worth of premium related maturity amount is exempted. Now, if you see maturity amount here 36 and 30, 28, I will exempt. Okay, these 2 put together, if I want to claim exemption, premium is exceeding 5 lakh. So I can't claim Y and D put together. I can claim YZ or I can claim Z and A. That's it. Any of these 2 combinations only I can claim exemption. Correct? Now I will see. These 2 I will claim exemption. 36 plus 28. So Y and Z, I will claim exemption of Y and Z. Only A will be taxed. If you do not understand this, watch my other sources related regular class or marathon. We have 10 illustrations like this we solved. In ICA book, 10 illustrations were there like this. So no, here insurance policy A is taxable. Which are the insurance policies Mr. Saksham would be eligible for exemption under 1010D in respect of maturity proceeds? Choose the option which is most beneficial. They are asking which are the life insurance policies in respect of which Saksham would be eligible for exemption under 1010D. Array, he is eligible for, okay, wait, here maturity amount is not there. Here there is no maturity. So B you don't have to consider an exemption because it is not yet matured. Because first of all, term insurance maturity amount won't be there during the lifetime of the SSE. Only when the SSE die he will get. So between X, Y and A, 4 maturity amounts, only A is taxable. Yes or no? Only A is taxable. X, Y, Z are exempted. So the answer is X, Y, Z are exempted. What's the answer? Correct? That's it. Are you clear? Array, this provision is very clear, very simple provision. No need to mug up anything. Next. What would be your answer if in MCQ1, if Saksham surrender LICA in 28 assessment year 28-29 and claimed exemption under 1010D in respect of such LIC? LIC A policy. Okay, if at all he surrendered A itself first and then claimed exemption, then he will claim A, then Z will be exempted, Y will be taxable. If at all A already he claimed exemption, if A already claimed exemption 2,50,000 and here 3, it is exceeding, therefore Z only, these two only he can claim exemption. If A already claimed it first, then he can claim for Z only, then Y will be taxable. Now the information is only for the purpose of MCQ. So which policy is exempted? Which policies? Then AZX. AZX. Where is it? C. That's it. The answer is C. Correct? Yes or no? The remaining we need to compute the full answer. Then only we can write it. Okay? Fine. Shall I go further? Yeah. Next one. So IFOS. I think everything is covered. You know, by the way, IFOS income, this is in date of maturity. You know, A is taxable. No, first question answer. The first question, main question, A is taxable, right? But that is taxable in which year? 32-33 assessment year, 32-33 previous year. So right now it is not taxable. So I can close other sources income also. Yes or no? So how much is that? 45,000 plus 16,000 is equal to 61,000. Are you clear? So I can close gross total income or total income because it's a default tax regime. 44,25,000 plus 6,54,000 plus 12 lakh plus 61,000 is equal to 63,40,000 is the total income. Can I compute tax on this? Now in this LTCG 112A is there. How much is LTCG 112A? 6 lakh. 6,54,000. Okay. So balancing figure 56 lakh 86,000. Guys, yes or no? Minus 1,25,000. So balance 6,54,000 minus 1,25,000. Yes or no? 5,29,000 into 12.5%. Hello, correct? 66,000. Hello, everyone. Yeah, next. This is at slab rate. Yes or no? 5686 minus 24 lakh into 30%. 3 lakhs. So therefore basic tax is 12 lakh 85,800. Now total income including dividend, including capital gain is exceeding 50 lakh but not exceeding 1 crore. Surcharge is 10% on both. Yes or no? Add 10%. Add 10%. So what is it? 12,85,800 plus 66,125 plus 10% plus 4%. So total plus 4% plus 4%. No relief ma. 15,46,602. Therefore answer is 15,46,600 is the tax liability under default tax regime. And they're asking that also. What is the tax liability under default tax regime? Default tax regime. Right now we computed 15,46,600. That's it. The answer is B. Fifth question. Tell me the answer. Correct? That's it. Able to understand? Hello, everyone. Correct? Then OTR. I think if at all we compute optional tax regime, then remaining 2 MCQs answers will be over. Now, by the way, what is the total income? Total income under DTR. What is the total income under DTR? Just now we computed 63,40,000. Correct? 63,40,000. Correct? Plus standard deduction 25,000 I should add back. Because 50 only you get. Yes or no? Apart from that, we have few more. Interest on savings. That's it. That's the only difference. Now you will get gross total income. Correct? How much is the gross total income? 63,40,000 plus 25,000 is equal to 63,65,000 minus 80 TTA. How much is that? 10,000. He is not eligible for TTB because his age is less than 60. Yes or no? Then TTA considered. Now look at Mr. Saksha made following payments toward medical insurance, health policy for him and his family members. Spouse 47, 13,500 eligible. For his mother 76. Remember, so category 2 50k limit, category 1 25k limit, 13,500. Preventive health checkup 5,500 for each of them. Okay, so category 1 already space is there for wife and mother. So for wife I will claim 5,000. So total 13,500. Correct? 13,500 plus 5,000 preventive health checkup maximum. So I can claim 18,500 under category 1. Now coming to category 2. You know, 26,670 I will claim for mother and he also spent medical expenditure. He also spent medical expenditure by credit card 17 for treatment of his mother. For mother, already medical policy is there. Therefore, treatment, medical expenditure is not allowed for the same parent who has already a medical policy. But for father, 27 is there. Yes, I will claim it. 27 is there. But remember, you have only 50,000 limit, but 27 you incurred. So balance 23,330 only you can claim. That's it. Therefore, category 2 50, category 1 18.5. So 80D answer 68,500 is the answer. Do you agree? Yes or no? Now you see, total put together preventive health checkup 5,000 I claim. Category 1 answer should be less than 25. Category 2 answer should be maximum 50. Every condition is satisfied. My answer is right. Then multiple policies, only this one, 80TT, only 2 deductions. That's it. Over. So 80D, how much? 68,500. So what is the total income? 6365 minus 78,500 is equal to 62 lakh, 86,500. Now one of the question is chapter 6A, how much? One of the question is chapter 6A. Over, answer B. Correct? Third question. Tell me. Third question, MCQ 3. Option number B, Bombay. Hey, wrong, wrong. Right, right. Which one? How much is the answer we got? I mean, did he pay any medical repayment? Wait. Did he pay any housing loan, all that? Interest on savings 10,000 we claimed. This we claimed. That's it. Wait. He is having insurance policy premiums. Every year he's paying. No. This we should total it. No, indirect information. It's actually. Amma. It's an indirect information. Yeah. Because it's paying it. No. Because all these policies matured when? After 25-26. So which means in this year 40,000 he would have paid on X related policy. Yes or no? Then he would have paid 3 lakhs a year. Array 1.5 lakh he can claim here itself. Under ATC, already premium paid is more than 1.5 lakh. 1.5 lakh maximum is the reduction. So ATC answer is there. Appa, very sensitive. This is actually something which we miss. It's actually something that we indirectly it is given. ATC how much ma? 1,50,000. Therefore the answer is, you understood? Premiums were in existence, no? Every year he'll be paying premium, no? That is something tricky. Okay, because they didn't give anywhere information that he paid the following policies. They just said the following policies were in force. We should drive information. Appa, very good learning. Indirectly, how ATC payment information is given, you see. We thought originally the testing point is 1010D. But gone. Yes or no? So 1,50,000. So right now, total deduction 2,28,500. Yes or no? 2,28,500. This is something for the first time. Indirect information on ATC is given. It's not directly given, indirectly given. Yes or no? So what is the answer? 2,28,500. But one time if you master like this, next time will be on indirect information given on deductions. Correct? Then, so what is the total income? 65,000 minus 2,28,500 is equal to 61,36,500. What is the tag? What is the under optional tax regime? 61,36,500. Correct? The answer is D. And now what is the tax liability? Array simple. Yes or no? So what is the capital gain? 6,54,000. So 6,54,000 on this tax amount. The same amount you will get 66. Balancing figure how much? Is equal to balancing figure 54,82,500. Yes or no? Minus 10 lakhs into 30%. Yes or no? 1,12,500 MRC. So at slab rates ma 14,57,250 plus 66,125. Yes or no? Plus 10% plus 4%. The answer. Correct? 1457 250 plus 66,125 plus 10% plus 4%. 17,42,740. Correct? That's it. The answer is A. Easy. Entire answer is over. If at all ATC point, if at all we didn't forget, if we forget, 2 MCQs will be gone, even though we know the answer, even though we know the provision, because here information was given indirectly. This is something, you know, he has multiple policies, and the policies, we generally, when we see this, no, we only think of maturity point of view. Exemption we calculated correctly, but there is indirect information about premium paid every year. That is something indirectly given. We should be very careful. If at all a student who do not solve this and directly see in the exam, definitely that ATC point they'll do mistake. Everybody, including me, every one of us will do this mistake, because here indirectly the information was given. Clear? You understood why we need to solve MTPs. Every MTP, every RTP, past exam question, you should solve, so that you understand how indirectly the twist will be there. Okay, that's it. Next. That's it. So almost 6 MCQs, 12 marks is over. Correct? Mr. Ramesh makes a gift of 25,000 to his wife, Mr. Rani, on 27th March last year. She invested in the business on 1st April 1 lakh. Okay, out of it 25,000 is out of gift, 75,000 out of her own. So total capital 1 lakh, husband gifted capital 25,000. Related to that, proportionate income, proportionate loss will be clubbed in the hands of the husband. So she invested in a partnership firm, man. Sole proprietor concern, this logic is applicable. Partnership firm, you directly club interest, and share of profit is exempted. Remuneration is only for the working partner purpose. It is not linked with capital. So next, as a capital, where the total capital, as a part of total capital contribution during the year ended 31st March, she earns an interest of 15,000 and salary 1,20,000 from the firm, both which are approved by deed. What amount shall be forming part of total income of Ramesh? Salary will not be clubbed. Interest alone will be clubbed. That too, how much? Interest 1 lakh is the capital. Firm paid 15k, but for the firm you'll get deduction only for 12,000. 12% only they'll get. 25,000 into 12%, how much? 3,000. Only 3,000. So 3,000 as interest on capital. What amount shall be part of? Only capital. Answer is A. Correct? That's it. Why? Because even though the firm paid 15k, but how much firm will get deduction? 12k. How much firm got deduction? That much only taxable in the hands of the partner. So 12% only taxable for the partner, even though he is getting 15%, doesn't matter. So on gifted amount, 25,000 into 12%, 3,000. That's it. Clear? Easy question. Next one. Mr. Pavan is engaged in business of roasting and grinding coffee beans. During the year, roasting is also there. Remember. Okay. His total income is 4.5. Pavan filed return of income for assessment year on 3rd December, belatedly. What shall be the fee payable for default in furnishing return of income? 1,000 rupees. Not exceeding 1,000. Because of the total income, by the way, wait. First of all, easy liable for filing return of income we should compute. You know, 4.5 lakh into 60% is only business income, correct? Roasting is also there. 2.7 lakh. 2 lakh 70. So after agriculture income exemption, the total income is exceeding basic exemption limit. 2.5 lakh is basic exemption. By the way, which regime is that? If nothing is mentioned, default tax regime, I assume. Under default tax regime, basic exemption is 4 lakh. His income is not exceeding basic exemption limit. Therefore, he is not required to furnish the return of income. And not required to furnish return of income, furnish belated date. That doesn't matter. 234F, 1,000 rupees penalty, 5,000 rupees penalty point. Is it linked with the due date for filing IT return? That is for late filing fee. When do I say, first of all, late filing? When you are liable to file under due date. Voluntary you are filing. Oh, I think I'm struggling between B and C. What is the answer given? B, I think. Okay, fine. Technically, he does not have a requirement to file the return of income, but still he is filing belatedly, therefore penalty is applicable. And if total income is not exceeding 5 lakhs, maximum penalty 1,000. Otherwise, 5,000. Correct? Okay, fine. So which means 234F interest, 234F late filing fee is applicable the moment you are filing return of income belatedly. That's it. Whether do you have, first of all, liability to file or not is irrelevant. Even if you are filing voluntarily but belatedly, you need to pay penalty. That's it. So the answer is option number B. New learning. Correct? That's it. With this, MCQs are over. 20 minutes, 22 minutes. Clear? Yeah. Let's start this MTP2 May 26 related income tax descriptive part. Okay. Now, Miss Natasha, an individual aged 54 years, is carrying on the business of manufacturing as a proprietor. Okay, fine. First, what is the question that they're asking? Total income tax liability under both the regimes. Give brief note wherever necessary. Okay, so first I need to compute under default tax regime. That means correct? Got. The turnover in the last year was 2.5 crore and in the current year was 6 crore. The net profit as per P&L account is 15,61,000 after debiting or crediting following items. Only 4 information they have given. Additional information is not dealt in P&L. That's what the meaning generally. Yes or no? Fine. So what is the net profit as per P&L account? So first I am computing PGBP. P&L account profit is how much? 15,61,000. Correct? Now, received subsidy of 20% on new machinery on 3rd July during the year under technology upgradation for the government. 20% on the new machine purchase. What is the new machine value first of all? Yeah, here they have given new machinery purchased 3rd July. Subsidy is received on 3rd July. So its date is also sinking. 7,25,000 into how much is the subsidy? 1,45,000. This was credited to P&L account. Under PGBP, this should be reduced from the actual cost of the mission. Explanation 9. Or, yeah, correct. Explanation 9 or explanation 10? 10. Subsidy. Explanation 10 to 43 subsection 1. If any cost of the asset is met by others, that cost has to be reduced from the actual cost. So, here 7,25,000 into 20%, how much more? Minus 1,45,000. So net effect 5,80,000. Only net effect will be added in the block. And moreover, subsidy credited to P&L, right? That is not an income, not taxable, because it is related to an asset. So therefore, it is not taxable under PGBP, but credited to P&L. Therefore, I should reduce it. So how much is the subsidy? 1,45,000. Correct? I should reduce it. Correct? Everyone understood the adjustment? Next, she paid a job charge for the value addition on the fabrics of 90 without deduction of tax to the job worker by account payee check. Amount paid is less than 194C per annum 1 lakh limit. However, single payment is exceeding 30,000. Therefore, 194C will attract hijack provisions will attract because last year turnover is more than 1 crore. Entire hijack are provisions will attract. Yes or no? So 30% will be disallowed. Yes or no? Yeah, that's it. So 30% is how much? 27,000. 40 subsection A clause 1A. Next, 25,000 paid to creditor for goods in cash. 25,000 disallowed. 40A13. Correct? Everyone? So how much is paid to creditor in cash? 25,000. Yes or no? If it is last year income, it is treated as income now. Last year expenditure paid now, it is treated as income. Current year itself paid, it will be treated as it will be disallowed. In both the cases, it is addition only. It's already debited. So we are disallowing it. Interest amounting 2 lakhs. Duly authorized by partnership deed of Mrs. Ramji Textiles as 15% per annum on capital employed. Wait. She's a proprietor. Okay, interest income is credited to P&L. This is income. She's a sleeping partner in Ramji. Yes or no? How much interest income is credited here? Interest amounting 2 lakhs. Interest amount is 2 lakhs, ma. So look at that entire interest income for proprietorship business. I need to compute separately. Remember, in PGBP, if the SSC has multiple businesses, you should compute business income separately for each business. So first, this 2 lakhs is credited relating to into the P&L account for proprietary business P&L. This is not PGBP proprietary concern business income. So first I will reduce it. Now next, wait, this I have kept point because now I should tax it again separately as a partnership income. PGBP I should tax it separately as a different business. I should tax it. I'll do it later. Then depreciation information they have given. Incurred loss of 1,17,000 in respect of derivatives. Okay. Commission paid to one agent allowed in earlier assessment year has now been received back during the year. Okay. Fine. She received a gold chain. This is IFOS. This is IFOS. Life Insurance Corporation. This is ATC. So optional tax regime. She also sold her vacant land. This land was purchased. This is capital gains income. Yes or no? This is 41 deemed income. So commission paid to one agent. Earlier deduction allowed 50 has now been received back. 41 subsection 1 deemed profit. So taxable. Yes or no? This is considered. Are you clear? So 41 subsection 1, how much more? 50,000. Earlier we claimed as deduction when expenditure was incurred. Now it is received back during the year from the agent due to settlement with the commission agent. Okay. Then she incurred. This is a different business again. This is a third business. Proprietor concern, partnership from second business, derivatives is third business. Three business incomes we need to calculate separately. Now look at the depreciation. First I will claim depreciation. So proprietor business I will close. Then I will calculate partnership business. Then I will calculate derivative business. Then I will apply set off. Then I will compute PGBP income. Very good actually. They gave the multiple businesses and asking you set off and carry forward provision indirectly. Now opening WDV how much? 4,75,000. Additions 5,80,000. How much is the addition? 5,80,000, which is more than 180 days ma. Correct? Then asset sold 75. One of the mission was sold. So remove the sale value. So what is the WDV value? 4,75,000 plus 5,80,000 minus 75,000 is equal to 9,80,000. This itself is the value available for depreciation. Now there is no less than 180. Entire 9,80,000 is subject to 15% depreciation. So minus normal depreciation how much? 1,47,000 minus additional depreciation. Actual cost is 5,80,000 into 20%. Hello? Wait, I'm not claiming deduction. I'm computing depreciation. In DTR, I will not claim, but I will compute. Yes or no? So, how much is that? So, 5,80,000 into 20%. How much is that? 1,16,000 is the additional. That's it. Now, under DTR, only this I will take. Whereas this I will take in OTR plus DTR. In OTR, I will take this. Correct? This I will take in DTR plus OTR. Whereas this only in optional tax. So right now how much is the depreciation? 32. How much is that? 1,47,000. Correct? But if I have to compute default optional tax regime, I will reduce that 1,16,000 also. Clear? I just computed and kept aside. That's it. Understood? Now proprietor business I am closing it. 15,61,000 minus 1,45,000 plus 27,000 plus 25,000 minus 2 lakh plus 50 minus 1,47,000 is equal to proprietary concern business income 7,71,000. Agreed? Now partnership firm, he is getting interest ma. How much interest is getting from partnership firm? 15%. So he is getting 2 lakhs ma, which is equal to 15, but only 12 is taxable. Correct? Yeah, 1,60,000 is PGBP income from partnership firm. Then he has another business. So depreciation logic is considered. Correct? Yes or no? Now, another business incurred a loss of 1,17,000 from eligible transactions carried out in trading in derivatives. That's a non-speculation business. That's a non-speculation business loss. How much is the loss? 1,17,000. I can happily apply set of intra-head. So what is the PGBP income? 11,71,000 plus 1,60,000, 1,07,500. So PGBP income 12,13,500. That is the PGBP income. Understood? Now if you observe cumulatively entire this information considered, then she received a gold coin worth 55,000 market value from her cousin, daughter of the uncle, not a relative. Yes or no? During the year. Therefore 55,000 is taxable. IFOS 56 subsection 2 clause 10, gift movable property. Yes or no? Fair market value exceeding 50,000. So 55,000 is taxable. Then okay, that's it. Only one IFOS. Then capital gains. Okay, this one I should consider. She sold her vacant land on 1st October 2025 for 50,25,000. The land was purchased in May 13 before 23rd July 2024. Cost of acquisition 4.8. But remember, indexation without indexation you should not do at this stage. You should do it at the time of tax computation stage, not at this stage. Yes or no? Capital gains, long term capital gain, how much? 15 lakh 25 minus 4 lakh 80, how much? 15 lakh 25 minus 4 lakh 80, 10 lakh 45,000. Yes or no? CI number, everything is given. That you should consider only at the time of tax computation, not now. That's it. I think I can now conclude with the gross total income. Correct? Huh? What is the gross total income? This itself is total income, gross total income, and total income. How much? 12 lakh 13,500 plus 55,000 plus 10 lakh 45,000 is equal to 23 lakh 13,500. By the way, this is a land, so 112 tax. That is, so 23 lakh 13,500. Are they asking tax liability? Oh my god, they're asking tax also. So now we have to be very careful. 23 lakh 13,500. Special incomes are what? 10 lakh 45 capital gain is special income. Correct? Huh? Under section 112. Am I right? So what is the balancing figure? 23 lakh 13,500 minus 10 lakh 45,000. Balance income 12 lakh 68,500 at slab rate. What is the age of the SSE? By the way, default tax regime, no. Why age? It doesn't matter, no. Yes or no? First 4 lakh 0. Next 4 lakh 5% 20,000. Next 4 lakh 10% 40, 60,000. 68,500 into 15% plus how much is that? 12 lakh. So first 4 lakh 0. Next 4 lakh 20,000 tax M plus. Next 4 lakh up to 12 lakh 10% 40,000 tax. Then 68,500 into 15%. Total basic tax 70,275. Do you agree? Now here I have first option. First option directly I will apply 12.5%. 10 lakh 45,000 into 12.5%. You know how much is the tax? 1,30,625. This is first option. Second option, I will recompute the capital gains with indexation. Full value of consideration how much? I will recompute the capital gains 15 lakh 25 minus indexed cost of acquisition. Cost of acquisition 4.8. Correct? Divided by 220 into 376. Correct? Hello? 376. How much is that? Eight lakh 20,364. So what is the capital gain? 7 lakh 4,636 into 20% tax. Ayyo, it's more than 1 lakh 40 is coming. 1 lakh 40,927. I think better to go with this option. So the tax is 1 lakh 30,000. Indexation option is first because 20% tax rate indexation is there, but there is no benefit for the SSE because of that. So this is the tax. So total basic tax. Total basic tax 1,36,25 plus 70,275 is equal to 2,900,000. What is the total income? So no rebate. Directly for plus 4%, no surcharge. Correct? 2,08,940, nearest 10 rupee. That's the income under default tax regime. That's the tax liability under default tax regime. Are you clear? Now we'll compute under OTR. Yes or no? Total income under DTR, how much? 23,13,500, 23 lakh 13,500. So what is the optional tax regime adjustment? There is only one adjustment right now. Additional depreciation, except that there is no change. Yes or no? That one and ATC or ATD something. So additional depreciation of 1,16,000. Correct? Hello? So revised gross total income is how much? 23,13,500 minus 1,06,000. 21,19,000. Hello? Sorry. 20. Okay. 21,97,500 minus chapter 6A. There is only one deduction for her. Correct? She deposited 50,000 with LIC for maintenance of her mother. No deduction. Wait. Aged 70 years, dependent upon him and suffering from severe disability. Flat 1,25,000. 80 DD deduction. Flat 1,25,000. That's it. Correct? Now what is the answer? 20,72,500. Before that, I will once again check whether everything I considered. Yes, perfect. Perfect. OTR only one item is there, correct? Huh? That's it. Everything I considered. That's it. The answer over. Tax liability. Now again, capital gains how much? 10,45,000. On the taxes without indexation is best, correct? Huh? At 12.5%, how much? 1,30,625. So 20,72,500 minus 10,45,000 is equal to 10,27,500. This is a taxable slab rate. 27,500 to 30%, 1,12,500. So basic tax 1,20,750. So total basic tax 1,625. 2,51,375 plus 4%. Correct? 2,61,430. Look at the answer. Matching, then fine. If the tax answer under OTR is correct, automatically DDR is correct. So is this income correct? Everybody just tell me, is this tax amount correct? That's it. Then income is correct. What about optional tax? Default tax regime 208,940. Is the tax correct? That's it. Over. Hardly 16 minutes. Clear, everyone? Understood? Next, look at. I'm proceeding further. Okay. Next, look at Mrs. Reshma. I'm proceeding. Okay. An Indian citizen is a government employee working for Indian government. She submits the following information. Are in MTP 1 also is there? No. Similar question. Salary income, yes, deemed to be accrue or raise in India is taxable. Profit from business carried in Orissa, source of income in India, fully taxable. By the way, what are they asking? Before even I look at taxability, determine GTI of Reshma, ignoring the provisions of means optional tax regime on an assumption that, R and OR and NR. In both the cases they are asking. Okay, fine. R and OR and NR, correct? So I will see R and OR, NR. Source in India, receipt in India. Only these two are taxable. If it is business is source and receipt both are outside India, not taxable at all. However, if the business is controlled from India, profession set up from India, again it is taxable. Now look at salary income 2 lakhs, 2 lakhs. Profit from Orissa 80k, 80k. Profit from business carried in Paris. Income is earned and received in Sydney, but business is controlled from Paris. Everything is outside. 0, 0. Correct? Loss from business carried in Canada. Though profits are not received in India, business is controlled from Dehradun. It is subject to tax 46k. But for non-resident doesn't matter. Only for R and OR business control profession set up in India, logic will apply. Yes or no? So, and I can apply these two set off. Because this is PGBP, this is PGBP. So I can apply these two set off. But remember, I should not set off this with salary. Yes or no? Then unabsorbed depreciation for business in Canada. Yes, I can claim. Canada business is controlled from India. Yes, I can claim this. I can set off with current year PGBP income. This does not apply. Profit from Indonesia business controlled from Delhi. Again controlled from Delhi. Where you deposited doesn't matter. But remember, 40% received in India. 70,000 into 40%. 28,000 for non-resident taxable. For resident but not ordinary, since control is from India, fully taxable. PGBP income. Very good actually. Correct? So what is the answer? Net answer. So 2 lakh plus 80,000 minus 46,000. Yes or no? Minus 16,000 plus 70,000 is equal to 2.88 lakh. Correct? Now whereas non-resident 28,000 plus 2 lakh plus 80,000 is equal to 308. That's it. Answer is given. Correct? This is gross. Fine. Optional tax regime 50-50. You reduce it. It's a gross salary. Yeah, we should take that assumption as gross salary. You should reduce it. So 2.38, 2.58. That's it. Standard deduction we missed it because every time when you see salary, you should assume that it is gross salary. If at all computed word is missing. Here computed word is not given. Therefore, you assume it as gross salary. That's it. Easy. Next, tedious question. Discuss the liability of TDS under Income Tax Act 1961 in respect of the following cases with reference to 26-27 assessment year. State applicable provision. Give brief reasons for your answer wherever applicable. Okay. Next, Manoj, a part-time director of ABC, was paid an amount of 2,49,000 as commission on sales, which was not in the nature of salary for the period, 1st April 2025 to 31st March 2026. Any amount paid to director comes under director remuneration. Okay, therefore 194J 10% to 24,900 TDS is applicable. Correct? Company has to deduct TDS under 194J. Though you may call it as commission, yes or no? Technically, commission, if you call commission on sales, if you say, there is a logic, other way logic also. 194H also can be applied. But since it is paid to a director as a part of director remuneration, we may apply 194J. Similar point we saw in one of the question, in our question bank solving, where they treated it as director remuneration. Yes or no? And 194J got applied. There I told you, alternatively 194H can be applied and 2% TDS. Two alternatives are possible. We don't know how it is considered. Able to understand? But actually, 194J director remuneration is there, right? That is for non-executive director. Generally, 194J comes into picture when? If you are a non-executive director. And if you are a non-executive director, because they may clearly mention part-time director, means not a full-time director. Therefore, he is not an employee. So, non-executive. For him, only sitting fee will come. Anything other than sitting fee will not come under 194J purview. Technically 194H comes. If you ask me in this question, what provision apply? H only applicable. So what is the rate of TDS? 2%. Alternatively, 194J is also applicable, where the company might consider it as a director remuneration and then deduct 10%. But here, the company is giving remuneration not because you are a director, but because you are bringing business for sales. So 194H is the correct answer, according to me. But alternatively, there is a possibility they might have taken 194J also. What is the answer they took? J they took, but actually that's not correct. It's actually H which is correct, because brokerage or commission on sales, that's actually 194H. Able to understand? So 194J considered, that's it. That's it. Next, Mr. Agarwal, a resident senior citizen, so which means any amount paid to director who is not a part-time, who is not a full-time, who is not a salaried employee. Try straight away, nature of payment is irrelevant. Directly apply 194J. Clear? Mr. Agarwal, a resident senior citizen, aged 86 years, is a retired State Bank government employee. He gets pension 72,000 per month. He has a savings account with Baroda and notified under 194P. He received interest on savings account 15 during the year. He is a senior citizen. Yes or no? More than 75. Specified senior citizen. And he is having a bank account with Baroda. And his pension amount is credited in that account. In the same, he has deposited 10 lakhs 5-year term deposit of 7% simple interest on 1st July, which is important for ATC calculation. Yes or no? He has no other income. He has opted out of optional tax regime. Okay. I mean, he's choosing optional tax regime. Fine. 72,000 into 12 months. 8,64,000 minus 50,000 standard deduction. 8,14,000 plus. He has received savings account interest how much ma? 15,000 M plus. Then he has deposited 10 lakh rupee 5 years deposit on 1st July for 9 months interest accrued how much? 10 lakhs into 7% into 9 divided by 12, 52,500 FD interest he accrued. Remember, interest is taxable on accrual basis. So therefore, gross total income 8,81,500. Remember, he does not have any other income. Therefore, that's a specified bank. He is a specified senior citizen. Therefore, 194P can be applied. Yes or no? Now, 8,81,500, right? Minus 80 TTB 50,000 minus 80C 5-year term deposit he made. Maximum ATC 1,50,000. Therefore, his total income would be 6,81,500. You understood how did I compute? And since he's a super senior citizen, up to 5 lakhs exempted, so 1,81,000 is taxable, 36,300, and optional tax regime, rebate does not apply because total income is more than 5 lakh plus 4%. How much is the tax? 37,752 is the TDS which they need to deduct. Over. Answer right? Oh, super. Able to understand. So 37,750 is the TDS which they need to deduct. You understood how everything I computed? Yes or no? Pension 72,000 into 12 months minus 50,000 standard deduction plus savings interest 15,000. Now FD, 10 lakhs FD is there on 1st July. So 9 by 12 into What is the rate of interest on FD? 7%. So FD interest 50 to 500. Gross total income 8,81,500 minus 50,000 80 TTB minus 1,50,000 for term deposit 5 years reduction 6,81,000 minus 5 lakhs basic exemption into 20% 36,400 plus 4% 37,750 TDS 194P, and he's exempted from filing IT return. By the way, what is the question that they're asking? What they're asking, liability for TDS. Okay, discuss the liability, give brief reasons, state applicable provisions 194B, and you don't have to file IT return. That's it. Guys, are you clear? Yes or no? Next 2 minutes, I'll relax. Fine, next one. What is this? House property, major income. Okay, gross total income they're asking. Ignoring 115, therefore optional tax regime. Okay, so many provisions were there, I think. Mostly house property only. Okay, no problem. Can I? Aditya owns a residential property whose municipal value, fair rent and standard rent, okay, respectively. The house has 2 units. Unit 1, 25% is utilized for his profession. Okay. Unit 2, 75% is let out for residential purpose at 8,500 per month. Only for 75% I should compute. PGBP related portion I should ignore. Only expenses relating to that will be claimed under PGBP under section 30. Okay. So now I will compute directly for this one, 75% portion, correct? So 75% portion, correct? Unit number 2. So gross annual value minus municipal taxes paid, then I get net annual value minus 30% minus interest on loan. Then what I get is income from house property, correct? Okay. And in PGBP also I should compute business income. If at all there is a loss, I should set off. Now look at. So here for the full property they have given, but I should take only 75% values. But anyhow, standard rent is higher than both. So 1,70,000 I should take into 75% only. Am I right? Fair rent or municipal value 1,70,000, but restricted to standard. Standard is very much higher. So therefore, step 1 expected rent is 1,70,000 multiplied by 75%. Therefore, step 1 1,20,000. Step 1 1,27,500. Then step 2 8,500 rent. Is there any vacancy? Nothing. No vacancy. Correct? So 8,500 into 12 months is equal to 1,02,000. So whichever is higher. Gross annual value 1,27,000. There is no vacancy, guys. Remember. Yes or no? Even if vacancy is there, 12 months rental income put together is still less than step 1 only. Means your step 2 is less than step 1, not because of vacancy or because of anything. You are charging lesser rent. So I will not bother about it. So therefore, I will charge based on step number 1 expected rent 127,500. Municipal taxes 8% were paid during the year by Aditya. Municipal value is how much? 1,60,000 into 8% into 75%. Yes or no? 9,600. Correct? Actually, gross value is how much? Divided by 75% minus 9,600. Under PGBP, you should claim 3,300. 3,200 under PGBP. Okay, fine. Right now, net annual value 1,27,500 minus 9,600 is equal to 1,17,900. 30% is equal to 35,370. Then interest on loan point is given. Light and water charges. He made the following payments. For the light and water charges, repairs, interest on loan for repairs of the property 2,000 plus 1,45,000 plus 36,000 into 25%. 45,750 is under PGBP. These repairs, I assume it is revenue in nature. Okay. If they clearly mention capital in nature, then I will add it to the block. Okay, fine. This I will claim in PGBP. For house property, irrelevant. Interest on loan taken for repair of the property. In this 75% is belonging to house property. No. How much is 75%? 27,000. Correct? Repair loan how much? 27,000. Guys, 75%. Then Mr. Aditya has taken a loan of 5 lakhs for construction of the above house. So repair loan is there. We can claim interest on that. Construction loan, you can claim interest on that also. Construction was completed on 30 June 2023. So which means July 2020 to 31st March 2023. This is pre-construction period interest. So 2021, 9 months, 21, 22, 12, 22, 23, 12, 24 plus 9, 33 months is the PCP period. Fine, we'll see further. Interest is paid at 12%. No repayment was made so far. Oh, PCP is there. 5 lakhs multiplied by 12% per annum. 33 by 12. How much it is? 1,65,000 is PCPA divided by 5 installments. So per installment 33,000. First installment 23, 24, 24, 25, 25. Okay, right now we are claiming third installment. How much is third installment? 33,000. Then current year interest 60,000. So total interest 93,000. Do you agree? Current year interest 60. How did we got? 5 lakhs loan into 12%. So this is total interest. By the way, this 93,000 is total interest under house property. This is total interest under house property. Appa, fantastic adjustment. I'll tell you. Until now, do you understand? Okay. So how much is the interest on house property? This is for full property. For full property, how much? 93 into 75% only you should take it for house property. 75% you should take. How much is that? 93,000 into 75%. How much it is? 69. Then remaining 25%. Wrong. For PGBP, I should not apply remaining 25% logic, because in PGBP, PCP logic will not apply. Up to the date of construction, whatever interest incurred before construction, that will be capitalized to the actual cost. That will be added to the actual cost. In the depreciation will be claimed on the block value. So in PGBP, technically current year interest alone will come. Yes or no? In PGBP, what many students do is PCP total interest will compute, 75% they will claim under house property, remaining 25% they will claim under PGBP. How come? How can you claim? Because PCP logic is not there in PGBP head of income. No. In PGBP head of income, PCP interest concept will not be there. Pre-construction period interest will be added to actual cost, will be added to the block, depreciation will be claimed. Therefore, in PGBP only current year interest will be there. So current year interest is 60 into 25% is for PGBP. How much is for PGBP? 25%. So 15,000 is for PGBP. Yes or no? Current year interest, how much is for PGBP? 15,000. This you should remember. Until now. First I will close the head of income, house property. Okay. 1,17,900. 1,17,900 minus 35,370 minus 27,000 repair loan, 69,750 housing borrowed loan. How much is the answer? Sorry, 14,220 loss from house property. Understood? It's a loss. Correct? 1,07,900 minus 35,370 minus 27,000. Hey, what? 1,07,900 minus 35,370 minus 27,000 minus 69,750, 14,220 loss. Perfect. Now PGBP income I will calculate. Did they get PGBP income? Yeah. Aditya from his profession is 8 lakhs during the year without debiting house rent and other incident expenditure, including admissible depreciation of 8,000 on the. Okay. See, they gave depreciation value of 8,000, 8 lakhs. Now fine, I'll compute PGBP income now. 8 lakhs before house property expenses, am I right? Depreciation 8,000. Now we already computed and kept. What are the taxes? One is municipal tax. How much is the municipal tax? 3,200. This is municipal tax. Yes or no? Then 25% of all these expenses, 45. Am I right? Light charges, water charges, whatever taxes, interest on repair loan, everything. Then interest on construction loan, how much? That's it. Answer over. 8 lakh minus 8,000 minus 3,200 minus 45,750 minus 15,000. 15,000 only. Yeah, that's it. 15,000 is equal to 7,28,000. This is PGBP income. Fantastic question, actually. Because that PCPA point will be there only in house property. It won't be there in PGBP, because in PGBP, up to the construction completion date, whatever interest is incurred will be added to the cost. Explanation 8, borrowing cost, 43 subsection 1. Okay, that's it. So now, by the way, what are they asking? Actually, compute gross total income. Array over gross total income. How much is the gross total? 7,28,050 plus house property loss of 14,220. That's it. Therefore, 7 lakh. This is GTI. Over. Look at the answer. Perfect. That's it. Understood? Yes or no? Don't apply house property logic to PGBP. PCPI concept is there only under house property. That concept is not there in PGBP. So when you are taking under house property interest, you should calculate for the total property, take 75% portion for house property. Remaining 25, you should not take like that. You should again compute interest deduction for PGBP purpose separately as per PGBP principles. Understood? That's it. Next. Fantastic problem actually. One of the finest question actually. Because it's easy only, but how many will recognize that PCP logic will not apply for PGBP? Because in PGBP, PCP interest will be added to the cost of the asset. So there will only be current year interest in PGBP for any capital borrowed, loan borrowed. Understood? Next. Can I proceed further? Huh? Arjun, a resident individual, 58 years, sells unlisted shares in private company on May 17, 2025 for 10 lakhs. 112A will not apply, 112 will apply. Unlisted shares. These shares were bought on 1st August 2012 for a consideration of 2 lakhs, more than 24 months, because it's not 12 months which is applicable, 24 months applicable. He paid 2,000 as brokerage. Fine. First I'll compute the capital gain here, okay? Full value of consideration how much? 10 lakh, correct? Minus transfer expenses 2,000, correct? Minus cost of acquisition, no indexation concept at all. Okay, how much is the cost of acquisition? 2 lakhs. What is the long-term capital gain? 7,98,000. Now where he invested? He deposited 5 lakhs in capital gain account scheme within the due date before filing IT return. How much is deposited? 5 lakh. And then in 2027-28 year, he withdrew 4,50,000 and purchases residential property in Delhi on May 1st itself for 4,50,000. That's okay. What is the amount of capital gain taxable in assessment year 26-27? Remember what he sold his shares and where he want to invest is in house property. 54F is applicable. Exemption is linked with the amount invested by net consideration proportion. How much is the amount invested in capital gain account scheme? By the way, how much is exempted? Capital gain multiplied by amount invested, 4,50,000 divided. How much invested? Sorry, 5 lakhs. How much invested? 5 lakhs. Amount invested in the new asset before the due date for filing IT return, or amount deposited in capital gain account scheme before the due date for filing IT return, divided by net capital gain. Net consideration, sorry. Net consideration 9,98,000. How much? 7,98,000 divided by 9,98,000 into 5 lakhs. How much is that? 3,99,800. This much is exempted. Correct? 7,98,000 minus 3,99,800. How much is taxable? 3,98,200 is the long-term capital gain taxable. Do you agree? Now, in 27-28 previous year, nothing but assessment year 28-29. By the way, within 3 years from the date of transfer, when the date of transfer, May 17, 3 years means May 16, 2028. So 28-29 year. In 28-29 year, previous year, what is the previous year? 28-29 year. In that year, if amount is unutilized and left, on which you already claimed exemption, then to that extent, whatever proportionate capital gain you claimed exemption will be retaxable. Am I right? Yes or no? So which year? It's previous year. Remember, 3 years is the time limit for construction. Yes or no? What he did, he withdrew and purchased a residential house. Okay, he purchased. He didn't construct, which means 2 years is the time limit. 2 years is the time limit means 26-27. So the taxation will be in the previous year 27-28 only. Because if at all he go for construction, 28-29 year retaxation will apply. If he go for purchase, 27-28 year retaxation will apply. Correct? Only one house. Under 54F, you will get exemption only for one house. You should not buy another house moreover. So 27, 28. So retaxation will apply. How much will be retaxation of unutilized capital gain account scheme amount? Same proportion. You remember earlier 7 lakh capital, 7 lakh 98 is there capital gain, whereas net concession 9 lakh 98, you claimed exemption for 5 lakhs. Technically you should have claimed only for 4 lakh 50 because that is what ultimately invested, means you didn't utilize 50. How much is retaxation? How much is retaxation? 39,980 will be retaxation. That's it. Look at the answer. This retaxation will be separately done. Hello? Am I right? Look at the answer and tell me no. 39,980 correct? Huh? This answer 398,200 correct? Huh? That's it. Over. My capital gains full-fledged regular class video is there on the YouTube. You can understand like amazing clarity you will get on capital gains like never before. Okay, watch there. You will understand how retaxation 54F mechanism works, how 54EC retaxation works, how remaining sections 54, 54B, 54D retaxation works, because there these three retaxation is different from these two retaxation. Okay, that's it. Fine. Clear? Here we are retaxing not because asset is sold within lock-in period. That provision is not tested. Here unutilized amount is there. Deposit amount is unutilized in a capital gain account scheme. On that we already claimed exemption. That's why we are retaxing it. Clear? Next. So technically 50 out of 50 we got. Now we are solving choice question. Yes or no? Next. Set off and carry forward question only, man. Okay, fine. I'll solve B. Okay. Then I'll go to that. Awesome Limited filed its return of income for assessment year on 15th December 2026 belatedly. Yes or no? On 2nd January, the accountant realized that he has forgotten to claim a genuine business expenditure 15 lakh. He wants to file revised return to claim such expenditure. No, not allowed. Already due date crossed. Am I right? So not allowed. No. Mahesh, resident, 45 years, earned a salary income of 2 crore. He also earned a dividend income of dividend from unlisted shares 4 lakh. He want to file return of income from assessment year through tax return preparer. Yes, he can do so. No problem at all. Only if a person has a tax audit, he should not file through TRP. Any other person can file the return of income through TRP. It doesn't matter how much is their income. 139B, tax return preparer provision. He can file. Look at the answer. First one, no. Second one, yes. Right? Huh? That's it. Can I proceed? Specify all the documents in which quoting of Aadhaar is mandatory under 139AA. Also explain to whom provisions of 139AA does not apply. Documents in IT return. You must quote Aadhaar number in the IT return. That is one document you must. Second one, there are two documents actually. One is IT return. Two, application for PAN. Look at the answer. In the IT return, you must quote Aadhaar number. And in the application for PAN, correct? Huh? Two documents. Answer correct? Huh? Huh? In these two documents, you must quote PAN. Then who are the persons for whom Aadhaar number provision does not apply? A non-resident. He need not have an Aadhaar. A non-citizen. He need not have an Aadhaar. Senior citizen. Sorry, what is the third one? 8 years and above. Then fourth one, authorized representative of foreign company. Sorry? Resident of Assam, Jammu and Kashmir, Meghalaya. That's it. 4 exemptions. Correct? That's it. It's a theory question, technically speaking. Over. Then one more question we are left with. Can I? Set off and carry forward. Kiran, 50 years, set off and carry forward problem. Look at. Under default tax regime, assuming Kiran's income is higher than her husband. Okay, the SS is spouse, wife income is higher than husband income. Okay, fine, we'll do it. Shall we? Appa. I think we need to list out. So many were there. Fine, I will. Can I? Appa, we are solving this MTP2. We are able to solve less than 1 hour. Okay, so fast we are able to solve. MTP2, solving expression all put together. So now look at, so salary with choice, by the way. So salary how much more? I will put 3 amount columns. I'll maintain here for set off and carry forward. I'll maintain 3 amount columns. 2,75,000. Okay, amount, amount. This is for intra-head setup. This is for inter-head setup. This is the final output for that. Okay, next. Considered income from let out property, let out house property. They said default tax regime, no problem. I can take as it is loss. Yes or no? I can set off with, I can't set off with other heads of income. By the what? Okay. That's okay. Very good. Standard deduction. Therefore, 2 lakhs is the income from salary. Correct? Only Kiran's income they're asking, right? Not entire family income. Yeah, Kiran's income only they're asking. Okay. Income from let out, I will only carry forward. In fact, they might have given reason not carry forward. That is also wrong. Did they give that reason? Okay, fine. We'll see the answer later. Okay. Next. Interest on loan self-occupied. We should ignore it. Default tax regime, right? Income from sale of rubber product from rubber plants. Yes, taxable 40% only. Rubber 60-40 or 70-30 or 65-35. For rubber it is how much? 35%. 2 lakh into 35%. Rubber how much? Rule number 8. 65-35. 35%. How much? 70,000 is PGBP income. How much is the PGBP income? 70,000. Yes or no? For coffee, only grounding. Yes or no? No roasting. Coffee curing. Okay, growing and curing. No grounding and no roasting. 75-25. Roasting 60-40. Tea 60-40. These are the rates. Yes or no? Rule 8, 7A, 7B. That's it. Fine. PGBP 70,000. Then business income retail 1,20,000. Business income retail 1,20,000. Then business income wholesale 1 lakh. Yeah, I can set off comfortably. Yes or no? Correct? I'll do one thing. These 3 inner column. Okay. Intra-head I'm applying. Correct? Then brought forward business loss. I will keep it pending. I will not do it immediately. Then dividend received from ABC, Indian company carrying. It doesn't matter. Still it's a dividend income taxable. 13,500. So other sources. IFOS 15,000. Correct? Income is 15. Next LTCG on sale of shares. STT paid 2 lakh. How much is the LTCG? 2 lakh. Next, short-term capital gain on sale of shares. Ayyo, I can set off these 2 happily. Yes or no? How much is the short-term capital gain? 1,10,000. So I will apply intra-head set off and middle column it is 90. Next, lottery winning. I should not apply set off on anything. Yes or no? I will directly take it to outer column. How much is that? 45, because I should not apply set off on this. Am I right? You're able to understand? Next. Actually, when you're doing, you should do headwise carefully. You should plan and do headwise. Then contribution to provident fund. No. Default tax regime. Income of minor. Special talent. Not subject to clubbing. Interest income. Deposit made. Yes, subject to clubbing in the hands of the mother. IFOS. No 1,500 benefit because it's a default tax regime. Yes or no? IFOS. Clubbing. How much is that? 8,500. Yes or no? After applying set off, we should add it. That's why I directly took it to outer column. Because income of minor child is added in the income of the parent whose total income is higher before minor income. Total income compute means after adding all the chapter 6 everything only you should add. That's why this clubbing income of minor is not eligible for set off and carry forward. Understood? Fine. Sorry. 10,000 no? No 1,500 benefit ma? Yeah. 10,000. Yes. Next. That's it. All are considered. Only brought forward business loss I should see. Now first I will apply here. I should apply here all these 3. How much is that? 1,20,000 plus 70,000 minus 1 lakh. How much it is? 90,000 is the PGBP. Now, is there any other head of income loss? No. Brought forward business loss. How much ma? 1,35,000. I will set off 90. So therefore PGBP income 0. Correct? Capital gains, sorry, salaries income 2 lakh. You know, IFOS, this is again 15,000. Technical IFOS put together will be 25,000. 25 plus 45, 70 will be IFOS income. These three are IFOS incomes. Correct? So capital gain 90,000 as it is will come in outer column. That's it. Gross total income how much? 2 lakh plus 15,000 plus 90,000 plus 45,000 plus 10,000. That's it. 3 lakh 60,000. That's it. Answer over. Because they're asking only income under default tax regime. That's it. Answer. Correct? Over. That's it. With choice we solved. So descriptive you see 35 on 35. So no. Even optional paper also you see. I mean the MCQs also you see. That only one question indirect information is given in MTP2. ATC point. Indirectly they gave. That alone we missed it. But otherwise it will be like 50 on 50 dot. Clear? That's it. With this MTPs are over.